Distinguished guests, panelists, and industry participants, warm greetings to you. Whichever part of the world you are joining us for this event, we welcome you to the Global STO Panel. The security token space has seen significant change since a year ago, when we last held this event. Tokenization projects and platforms have since proliferated. More issuers and investors are on board. The industry has moved on from a more sophisticated discussion about what tokenization is and why it should be considered. There are now concrete projects and actual deals that we can talk about, and the conversation has shifted to an extent from why tokenize to how to tokenize. Which assets to start with? Private or public blockchain? Which regulatory regimes work better? To just give a few examples of the questions being discussed. A common theme in the dialogue has been democratization. Financial institutions tend to be competitive and inherently untrusting of each of their competitors. And for them, the word democratization is not always welcomed. This is part of the reason why we have seen banks doing their own tokenization platforms, their own coins, and it's also why the collaborative efforts of common projects like R3, for example, are not taking off yet. Notwithstanding these barriers, there is a demand that has been created bottom-up from all corners of the ecosystem and from a variety of players, the good, the bad, and the ugly, one might say. And why is that the case? With technology advancements, regulated security tokens and the market infrastructure that supports them are now a reality. These tech changes in turn bring about the democratization of finance by reducing costs, expanding access and enabling diversification. Benefits are strong and multifaceted, value can be created. And because the case is so compelling, the change will happen from the bottom up, whether or not traditional financial institutions take the first step. For investors, tokenization means fractional investment sizes and therefore access to previously out-of-reach investment opportunities. Tokenization helps investors achieve better diversification and to realize returns sooner because earlier exits are possible through secondary trading. It means enhanced transparency as well because the speed of a blockchain-powered network helps you track your investments with much shorter time lag. For issuers, tokenization expands the universe of capital they can raise funds from prior to an IPO. It means faster speed to issuance and a lower cost to raise capital because processes are less manual and the number of intermediaries involved is reduced. The laws of the market strongly suggest that over time, tokenization could lead to better valuation of the assets that they are selling. The ecosystem benefits are worth mentioning too. That is, benefits that don't neatly accrue to an issuer or an investor, but are enjoyed by the wider financial community, a positive externality, if you will. Tokenization enhances capital flows. Funds are able to find the best and most deserving projects to finance because barriers have been broken down. In the long term, the economy is more productive, which benefits employers and employees, as well as governments, through an increase in tax revenue, for example. Another key ecosystem benefit is risk management. The blockchain network that security tokens are traded on allows settlement times to be reduced from a few days to a few minutes. This has significant implications for counterparty risk, both for individual transacting parties and the system as a whole. System-wide risks can be reduced. If security tokens do bring us benefits, why is there resistance to change? Why is traditional finance slow to adopt this innovative way of issuing securities? First, there is incumbency. Intermediation generates profits, and incumbents are the key beneficiaries. The inefficiencies can sometimes in a warped way give rise to opportunities to charge interest or fees. For example, a longer settlement period creates the need for financing and clearing, services that financial institutions currently provide. The ecosystem of players and services that has been formed over many years will naturally be designed to entrench the existing value chain rather than give in to a more decentralized system that implies the surrendering of both power and profits to the smaller players. Second, there is a misjudgment. Incumbents often misunderstand the disruption that they face. They might get caught up in the moment and fail to see the big picture of what's happening, the new business model that's growing and will eventually come to dominate the space. Instead, they stoop down and attempt to compete with new upstarts on a feature-by-feature basis and miss the wood for the trees. The third reason is legacy. Banks and traditional FIs have complex and expensive systems that serve their current business model. This prevents them from taking full advantage of emerging technologies. Entrenched processes also tend to drain resources, providing little value and making incumbents slower to react. Finally, there's regulatory complexity. Owing to the fact that financial deals and transactions cross jurisdictional borders and involve multiple regulators, each regulator sees things in their own way and has different timelines and appetite for approving and regulating an innovative financial service. But even in the face of these challenges, there are good reasons to be optimistic. If the financial system were fundamentally incapable of change, we will still be calling our stockbrokers for each trade and paying for every product and service in cash. What are some of the grounds we have to remain hopeful for the future of security tokens? First, financial institutions are rational. The breaking down of traditional infrastructures and oligarchies can happen if financial institutions recognize that the desire for democratization is strong amongst both issuers and investors. When faced with a steadily shifting landscape, FIs that are realists will be asking what role they can play in the new status quo to come. In fact, they are probably better positioned than other fintech platforms to succeed, given their resources, the deep reservoir of trust that they have with the markets, and their large base of acquired clients and customers. They can buy time by writing off and depreciating legacy technology over many years, whilst building new digital and blockchain businesses or partnerships that may begin as pilot projects but eventually grow into important revenue generators. Second, regulators are driving change. In jurisdictions like Singapore and Switzerland, regulators have provided greater clarity in the security token space and have issued licenses to new players. If these new regulated STO platforms maintain their credibility and track record over time, they will attract more investors because investors do differentiate between platforms and they do understand what it means to be a regulated, credible entity. Third, the rise of central bank-backed stablecoins may prove a game changer for security tokens globally. Stablecoins, also known as CBDCs, exist in the same tech ecosystem as security tokens and other blockchain-powered financial services. Despite the fact that they are anathema to DeFi purists, stablecoins could help mainstream the benefits of blockchain technology. This could in turn pave the way for other applications, from security tokens to cross-border payments, to be more widely accepted. As I was preparing for this speech, I recalled a discussion where I was involved in the JOY project with a market infrastructure consortium. The JOY project had the goal of finding a way of bypassing or replacing the SWIFT network for global payments. However, almost everyone in the consortium was reluctant to do this because they were all partial owners of the SWIFT network, but also because they were all trying to build their own individual projects to bypass SWIFT. Finally, someone jokingly suggested using the collective pot of capital that all the FIs had put into the project to highlight the stories of rubbish ICOs or even to hire hackers from Estonia to drain some wallets and hack a few dodgy exchanges. To keep the horror stories fresh in the minds of regulators and other stakeholders with the hope of slowing down digital adoption. It is true that dodgy exchanges should not exist, and our vigilance of such exchanges would rightly result in the slower adoption of new technology. But as regulators catch up and figure out a way to regulate new technology well, the wheat will ultimately be separated from the chaff. Democratization and its inevitable path forward can be grounded on progressive regulation and regulated platforms. There's a path forward for steering clear of market failure and for facilitating the potential benefits in a sustainable manner. That path is regulation, as democratization on its own can lead to anarchy. Over the past year, I have observed the rise of many forward-thinking companies riding the digitalization wave and creating innovative financial solutions, both in relation to security tokens and other products. On this note, let me thank edX for inviting me to address you and for its work in democratizing private markets. I wish you for an exciting and interesting session ahead. Thank you.
Thing on what's happened since last year to today. So last year around this time, we had a short 1-hour webinar with Alex Nascimento and Baxter Hines. They both had written books about blockchain and securities tokens, and we were very gratefully case studies for them in their books. But today, just 1 year on, I think we have done so much and accomplished so much as an industry that we now are running 3 panels and a keynote speaker for this event. So very happy that the team has put this together. Now, ADDIC, since last year, we have done more than 25 products across funds, credit, pre-IPOs, and we're very, very pleased to be working with global partners like Partners Group. We worked with UOB on the Sembcorp Sustainability Bond. And we even sort of ended up launching a crypto fund managed by Trovio Group. Now, I think this year the panels are super exciting. I'm very excited to kick off the first one after Sutat's fantastic keynote speech. So we hope to be able to replicate that performance. But I think with the panelists and myself, I'm quite sure we will do a good job. And of course, the last panel for today, which happens later this evening, we will actually have Alex Nascimento and Baxter Hines again this year, and for them to really reflect on what's happened in the last year in this space. So without further ado, I'd love to introduce my co-panelist speakers for this hour. Welcome, everyone.
Thank you.
So first person I'd like to introduce is Chekpeng. Yep. So I don't see Chekpeng on. All right. Well, we're getting Chekpeng on. Chekpeng is UOB's Executive Director and Head of Strategic Alliances and FinTech. And in his role, Chekpeng leads his team to work with business and functional teams to forge and expand strategic collaboration and partnerships with external parties operating in the fintech and digital ecosystems in line with UOB's objectives and strategies. Prior to this role, Chekpeng had over 20 years of commercial and corporate banking experience with DBS, HSBC, Bank of America, Merrill Lynch, managing client relationships across various sectors. We're very pleased to work with Chekpeng and his team, which were quite instrumental with what we did on the Sembcorp Sustainability Bond. The next person we have is Victor. Victor is a very, very good friend of ours. Victor and ourselves, work very closely together to tokenize the Partners Group Global CCAP Fund, which we're very proud to work with the team here. Victor is the head of distributions partners, liquid private markets for Asia, and head of client solutions for ASEAN, Hong Kong, and Taiwan. And Victor is fortunately based in Singapore, so we get to spend a lot of time discussing the strategies and what is tokenization and how is that be impacting the broader fund management world. He has been with Partners Group since 2012 and has 12 years of industry experience. Prior to joining Partners Group, Victor actually served as the global director for Red Mango's international business, and prior to that worked at KB Asset Management Global Alternatives Investment Department. Very, very happy to have Victor here with us today. Last on our panelists, but not the least, Ami. Ami is one of the pioneers of the digital securities market and co-founder and CEO of Onera, an institutional-grade digital securities network where all nodes are regulated financial entities such as banks, asset managers, and exchanges. Prior to Onera, Ami was a co-founder and managing partner of Spice VC, where he co-founded Securities and invested in multiple companies in the securities tokens and blockchain space. Ami arrived to the blockchain world after co-founding and leading several startups, mostly in the mobile and games industries. And so we have a very experienced tokenization expert here as well with us today. So before we start, I just want to remind everyone, if you would like to submit questions, we do have a chat function that you can key your questions in, and we'll try and cover as much as possible. We do have a lot of topics to cover here, so we'll try and get to your questions at the end of the panelist session. So thank you, everyone, for joining us. Perhaps I will address each question to each of you, and if you'd like to spend a few minutes introducing what you've done in the space, that would be great as well. Ami, we'll start with you. So what has been your experience tokenizing Spice VC, and what are some of the lessons learned since you've done it actually a few years ago now? And how are you leveraging that experience for Onera?
Yeah, thank you. So, hi, Oi. And when we started talking about tokenization 4 years ago, the market was still in the phase of talking about ICOs. So nobody actually knew how to digitize securities. It was only done by a group called Blockchain Capital, but they just issued a token and called it a security token at the time. So it wasn't very advanced. And then we wanted to tokenize a fund, so we went through the whole process. And interestingly, we found that the best jurisdiction to launch the fund was Singapore. So we launched in Singapore. And what we realized after launching the fund was two things. First, we realized that at the time, being first to market is always very, very difficult because nobody understood and knew the term security token, digital securities. Investors, especially institutional investors, didn't know how to invest in it. But we also learned that the technology is super interesting and that there's a lot of hunger and a lot of demand and a lot of people that want to tokenize, and effectively that the supply of assets is almost unlimited. I'm no longer with the fund. I left the fund to start Spice VC about 2.5 years ago. And the reason was that I felt that the digital security revolution starts with private markets, and private markets are institutional. So I wanted to create a platform that interconnects the institutional market. And I knew it was going to be a long road because financial institutions are very big and they move slow, and everyone has an agenda, and it's a very competitive market and so on. We can talk about it in a minute, but we've done a lot since we started the company 2 years ago, especially through COVID-19, which allowed some advances in the space, especially around everybody understanding that digitization is coming. And what I can say really about the experience from Spice VC was that, unless we get institutional investors comfortable and institutions comfortable and regulators comfortable with the space, then it will not fly to the levels we want it to fly. However, this is already happening. If 4 years ago was too early, 3 years ago was too early, 2 years ago was starting to happen, last year it was happening, and 2022, I'm just seeing it across the board, financial institutions, one after the other, and now the push is coming from within the financial institutions. So the market is really about to explode, in my view.
Thanks, Ami. I mean, I've been with Ami on a couple of panels, Ami moderating a few of that, and we actually do see, the banks are starting to sort of really have this deep conversation about what each of them see as tokenization. And we'll come to that when we speak to Checkping in a moment. But my next question is actually for Victor. Victor, welcome, and hope you had a good trip recently. And, my question for you is, how are GPs like yourself thinking and approaching tokenization? Is there a consistent view? Is Partners Group ahead of the game and a global leader in the way they think about that? Where is everyone in the process?
Thank you. Yeah, a great pleasure to be here today. I must say I have to agree with what Ami has just mentioned, that it's happening now, and it's happening as we speak. However, when you ask me how are the GPs today looking at this, or where we are at, it's shockingly slow and it's shockingly new. And reason being, in all fairness, investment guys, their KPIs is to deploy. Fundraising guys, capital markets, the target is to raise funds, right? and we all have KPIs. Operations team is no mistakes and facilitate investments and fundraising. And when that happens is you just you're in the hamster wheel, right? Listed companies, you gotta that margin, EBITDA margin, that revenue that you gotta achieve. Hence, you tend to lose what's out there in the long term. And look, the tokenization is still happening as we speak, and the the scale is so small that it doesn't really attract the attention. Now, having said that, after we've tokenized together the Global Value Fund, it's been and this is how the industry works. If something works, you have this herd, this exponential, mega, viral. I don't know how you would even call it. I've gotten more calls in the last 3 weeks than I've ever gotten through friends, acquaintances, colleagues in the last 2 weeks compared to the last 3 years, I would say, and all asking how and why and when and where, right? So this tells you it's been slow, but all of a sudden they've realized, and all of a sudden they think, hey, it's time to wake up and to really pay attention in here. And I'm sure, Oyi, although we're friends, so you have to keep confidentiality with the other partners that you're working with, but I'm quite sure you have, at least 5 of the top 10 asset managers on the private market side that are already in discussions with you. I mean, be that big or small. I mean, the fact that they are talking to you right now, and I can, bet whatever you want that the traffic on your app has been far greater than what you've experienced in over the last year. So I am quite sure that this is now that point soon to reach inflection.
Yeah, I think what's very interesting with that, Victor, is, and Ami would have seen this, in 3-4 years ago, you couldn't really have a conversation about tokenization. I think the word frightened the traditional players away very quickly. When we got our license in 2020, even then we had to stay away from the word tokenization because our investor base didn't understand what actually that meant. All they wanted to understand was, what investments are you bringing me and am I going to make money, right? I think today the conversations with fund managers have shifted quite dramatically. And the conversations were not about, what are you going to, deliver 100 million? Actually, it's about, what does tokenization mean and how can I, keep my eye on the trends that are happening in this space? Because I think they do anticipate a lot of this conversation. And even Mr. Menon, Ravi Menon, who is obviously our central banker here, and he made a lot of references to tokenization, and we were grateful to be named, but he mentioned a number of other players here who are actually looking at tokenization, and that is a very big step in the financial services and what's going to happen in the financial services world to come. So my question, Chek Peng, welcome back. How is a traditional bank like UOB thinking and looking at tokenization?
Hi, Oyi. Thanks for inviting me. Very pleased to be here with the panel. I think for the panel, for the audience who have not been familiar with UOB, we have been a bank operating in Southeast Asia plus Greater China for the last, I can't remember, 87 years. So it's a very traditional bank. And we really follow where our clients, are and what they need, right? In the past few years, it's all around digitalization, right? And tokenization, in a way, is a form of digitalization. The past few years, a lot of things were very focused on, and we have been very focused on areas of how do we deploy data, how do we deploy AI, all these things. That's been keeping us busy because that's something that was a little bit more advanced, and banks could see how we could use it. But in the last couple of years, or maybe, in the last 12, 18 months, this part about digital assets, tokenization, Internet of Value, investors suddenly, seeing that this thing is really coming real, right? I mean, 5 years ago, everybody was talking about crypto, talking about Bitcoin, talking about Ethereum, talking about Dogecoin. Today we have Shibu, but things are getting real, right? So from a bank perspective, we are seeing that we want to use this really to um, do something with it that's relevant to us, to our clients, and the areas of capital markets is a very natural thing for us, right? And we see the advantages of using blockchain, and we did a deal with you. It's proven to work. To what Victor say, it's an effect, right? Once it's shown to work, then people start to say, hey, let's get excited about it. Let's see what we can do further. So I think that's where we are, and we are very excited about it. Yeah.
Great. It's sort of great to get all the excitement in this room. 1 year ago, I think, as I was telling some of you, it used to be these panels where the fintechs would just sort of sit around and talk about ourselves. Today, the conversation is far, far deeper, and the implications across the different parts of capital markets, whether it's private markets, tokenization actually has an impact on a number of things, even the traditional spaces like the bond space. So, and I think the potential disruption capability is there, but we also see, I hate to sort of break the party a little bit, but eventually, the whole piece around digital currencies, right? Whether or not it's crypto or whether or not it's CBDCs are going to also sort of creep into the conversations of STOs. It's a natural conversation. So my question to Ami is, what are your views on, crypto and CBDCs? And how do you think that will impact what you're looking at, and certainly what we might look at? And do you think, which asset classes will benefit out of this, transition, whether it's at level 1 CBDCs or level 2 cryptocurrency?
I think it all connects together, because what is the digital transformation that we're talking about? In the end, my theory is that in the end, all accounts that people hold with banks and exchanges and so on, all accounts will be digital wallets, and they will be able to trade with every other account, which is also a digital wallet. And then you don't need a lot of intermediary in the middle, and you can go straight to your exchange and you can trade an asset that is launched on a bank in the US, and everybody can see everybody and trade with everybody. And eventually all assets will be there. So it's just a matter of time, and it's a matter of market movements and regulatory structure of what will come first. But to me, I make a big distinction between the future and the immediate. The future is everything is going to be digital. The practical thing is people thought that banks will go to crypto first because digital was invented in crypto, but banks are afraid of crypto. So what's actually coming first to banks is digital securities. But they will all deploy crypto in 2 years. I mean, that's you can write my word here. Everybody will do the spot trading and will enable Bitcoin in 2 or 3 years, because they will not be able to afford not to, because their clients are taking their money away from the bank and putting it on Coinbase. And if you want to stay in the game, you will have to enable it. So it's just a matter of time. But when you talk about the practicalities of tomorrow, we're trying to be very, very practical. And way before CBDCs and before stablecoins, we are all deploying solutions that are based on digitized representation of money. For example, pre-funded accounts that you just put the money in an escrow account and you represent it digitally, so you can trade online. So there are solutions that are available today. Then the next stage is stable coins, because they are the easiest to deploy, because private companies can deploy them. So stable coins like USDC and others are second to go into the market. And then you will see other solutions. And it depends on the countries. Some countries in Asia are moving really fast on CBDCs. If you ask me, Europe is like 2-3 years away from even talking about it. And the US might surprise everybody. I don't know. It's a guess at this point. So CBDC for me is the future. It's going to come. Great. We are now looking for practical solutions. So practical solutions for us are, as I said, pre-funded accounts with representation of escrow money, some stable coins. There is a new development in a market where money market funds are being positioned to trade as a payment mechanism, and we're involved in such projects as well. Still to be seen whether it will work or not. So, as I said to your question, I'm breaking it between the future 2-3 years ago and what we're actually doing now. What we're doing now is we're looking for practical solutions, and that's where the market is at this point in time. Because really, most of the financial institutions right now are still afraid of crypto. I wouldn't say even afraid. Afraid is the wrong word. They're not comfortable with crypto from the regulatory perspective, from the security perspective, from finality, all of these problems that they have with it. Although the mood is changing towards being positive to it, it will take, as I said, some time, maybe a year, maybe 2 years for some of the banks.
I think he froze.
I think we lost him there for a moment.
Yeah.
I actually, while we wait for him to come back, I'm going to throw this question to Chek Peng. What does UOB think about CBDCs and, the eventual, what is UOB's view of cryptocurrency? Presumably CBDCs are a bigger focus. And how do you think this market infrastructure will develop?
Sure, thanks, Oi. I think from UOB perspective, CBDC is certainly a lot more natural because it's regulated, it's legal tender by central bank. So we are leaning towards it. But end of the day, the way we see it is that when it comes to digitalization, to Ami's point, when things become everyone has the ability to put everything in the wallet, then what you need is digital money, not electronic money, but digital money. And whether is it digital, whether is it CBDC or is it cryptocurrency, if it becomes a form of money, you need that in order for people to transact. Right, payment is a horizontal. Whether is it securities, whether is you buying something or whatever, it's a horizontal. You need that mode of payment, and you need digital money. When central bank starts to get interested in CBDC, that's also one of the reasons why we think things will accelerate. We see it that way. So that's also one of the way we see it. I think to Ami's point, banks are still wary about crypto, but we hope that things will get clearer. In terms of how central bank will define and treat or regulate cryptocurrency, right? Yeah.
So yeah, apologies for I dropped. I say I hope I wasn't talking to myself for too long.
No, it was a very nice transition from Ami, your perspective to Chek Peng's perspective.
Great.
All right, Victor, my question for you. Where do you see tokenization, 10 years time, right? If you were to, have a crystal ball. In 10 years time, how do you think tokenization will change the world from a, private markets perspective? Do you envisage, sort of a true democratization possibility? Do you see a deeper capital markets efficiency for that? What's your crystal ball saying?
Yeah, it's and allow me to say this is personal views, not the views of the firm. So disclaimers in advance. But before we go there, I think although it's happening now, as you mentioned, in 2020 you were not even allowed to discuss tokenizations, right? This means, and we're only in 2021 November, so it has moved very fast. This also means 1 year is not enough to make a market mature. So, and this is very interesting because I was scrapping this article from the Financial Times that stated the following: theft and cyber fraud has investors have lost in 2020 1.5 billion worth of money in the crypto space, and in 2021 this has ballooned to 10.5 billion. This is an article in the Financial Times. And this says a lot, right? This is why I think Chek Peng mentioned it on why institutions are, not comfortable to an extent on whether to onboard these or not. This is, I mean, cybersecurity and knowing what you're getting into. I think it's something very, very important. There is still a big amount of trust and track record in the existing traditional financial system, right? So for the time being, I think it's going to take an absolute, amount of years for this to be adopted while going in parallel. Now, I would say, 3-4 years maybe it will take minimum to prove that the security tokens, right, and the parties operating them are reliable enough, and all of the checks and balances are put in place. And once the comfort is there, I think the adoption will go even faster. Now, you've met our chairman, Stefan Meister, last week. If you had to see the fact that ADDX was regulated by the MAS and the stakeholders, right? All that provided comfort to players like us. So I think one should never underestimate the the influence of institutional players backing the exchange, because there needs to be that reliability, be that by the state or by any other institution, backing that company. And this ecosystem, I've heard that there were 600 filings of digital exchanges in Singapore this year alone. How do we know that all 600 are going to be there? I mean, Singapore is the largest ecosystem of digital exchanges in the world, right? So how will we know if all of them would be still in business? No one knows, right? So I think time would only tell. And to that point, once those checks and balances and all of those regulatory / the cybersecurity element have been proven to be there and efficient to work, I think 10 years from now, on a utopian, idealistic point of view, now you see public and private. I think the private element would disappear, and it will be just a public element with public equities, public real estate, collectibles, gold, etc., etc. So that private side will most likely, in my view, disappear. Institutional investors they can still have that optionality of staying invested 10 years on like the capital call funds, but they will have the optionality of playing with the market to get more options, right? And to this point, this is nothing strange. I mean, I was on 2 calls lately with digital exchanges. They were selling us a story of that they have 5 to 10% market share on derivatives on crypto. I'm talking about billions already. So after 10 years, there will be everything, call options, put options, all kind of derivative lending solutions on security tokens. That's why some people call it the Wild West right now, because it needs to get there. But I think it's really important that this market also mirrors, to an extent, the traditional side, and gets the best ideas out of it, and adopts and keeps the most efficient, like the interoperability, the atomic settlement, the cost efficiencies factors embedded, and eventually this will win, and there will be a hybrid of the traditional that will be adopted to the security token exchanges platform. But in a nutshell, I think it's all going to merge, and the word private will no longer 10 years from now, and this is again a subjective comment. I think it's it will all become one, and it will be a much more efficient capital markets function as a whole.
Great.
Yeah.
Well, my next question is going to be to all 3 of you. What do you think are some of the key hurdles for us to get into that 10-year, view of a convergence of public and private, and more importantly, the sort of the wide global adoption, taking us, from right now, I think we estimated about $1 billion in STOs globally, to what's the 10, 100 billion? What's stopping us from getting there? Ami, why don't you go first?
I think that the biggest hurdle is inertia, is to get to that inflection point that we talked about. And I think that I separate the challenges between two very distinct types of players. One type is banks and asset managers and exchanges, the existing ones. The problem there is that they just move very, very slow. It's a cultural thing. I mean, my life with startups, you start doing a deal with startups, you take up the phone and you speak to somebody in charge, and they can make a decision, and they arrange another meeting with you in 2 days. If you go to a bank, you pick up the phone, there's a map of people that have to be addressed. They all have to agree. They arrange a meeting with you in 3 weeks, and then they push it for another 3 weeks. And that's the way that it works, and that's the reality of things. And I think that the biggest hurdle that we have within the financial institutions is that, they have profitable businesses that operate, and yes, there's a new market coming in. But change takes time, and for me, the kind of the point at which that becomes less of a hurdle is when you start seeing pull instead of push. And what I mean is that we're moving from a point where we're pushing into financial institutions, where we're talking to the innovation people within the financial institutions, and they're trying to find the right people within the organization. We're pushing. We're now starting to very quickly move to pull. Pull meaning the organization itself, the people in the businesses are calling you and saying, hey, can I speak to you? What do you have to give us? And once you start moving into pull, and I have had the pleasure of seeing several digital revolutions happen in other markets. When you move to pull, it happens faster than people expect. So the biggest hurdle for us is to move from push to pull, and to get to a point where financial institutions start to understand that, like I heard from one of the big bank managers, our clients are moving all of their money out to other places. And what are we doing? And what is this tokenization thing? Why are we not there already? So that's on the other side, there's the work with the kind of, up and coming players like Addicts. And I think we're doing a network. Onera is a network that connects multiple financial institutions. So I see a lot of startups, and the challenge for us is to differentiate between those who will, like Victor said before, those who will be here in 3 years, and those who are not. I mean, the real players to the not so real players, the people that have the stamina, the funding, the management capability, the drive, and so on, and there aren't too many of those. It's a hard market to get into. So these are the two kind of sides of the hurdles that we're seeing. Unlike other people, at least for digital securities, I don't see regulators as the big hurdle, because in digital securities we're using existing regulations. Unlike in crypto, mostly is using existing regulation. It is internal. It is up to us, the industry, to make it happen. So the hurdle is really within the industry rather than external. Once we get to that point, it becomes a lot easier. You can start getting the better assets, which in turn, bring the better investors and so on. So that's for me is the biggest, and that's what it's not just it's not just my theory. This is what I've been working on for the last 2 or 3 years, is exactly against this hurdle of getting people to move from us pushing them to do this to them pulling it from us.
Thank you. Thanks, Ami. That's great. Chikpeng, what in your view are some of the key hurdles?
Sure.
You
Thanks,
should have
Oi.
yourself
Before that, maybe let me just address one of Victor's point just now about the 600 over applicants in Singapore. Just to clarify, those were payment services act licenses, more for the crypto licenses, not so much for the securities tokens license that ADEX has. So, I don't think there'll be that many. But to to the part about the challenges, I think before I come to that, I think in terms of banks and the whole securities market, right? I think relatively, while crypto has grown very fast and very well, it is still relatively a small fraction of what the entire global capital markets is, right? Just comparison, today a global bond market is 120 trillion. Banks, financial institutions who has been in that market for a long time and highly regulated. I think it's natural for us to also, take it a little bit more slowly. But we are at this, at the same time trying to learn to be fast, right? Whether we can launch a speedboat or whatever, we're also trying to launch to be fast. But there are indeed more things that we do need to consider, right? So coming to that, in my view, and I actually came across this over the weekend, someone wrote something about it, and I thought it resonates very well. In terms of scaling it and for securities market to really take off in a big way from a tokenization point of view, I think there are maybe 5 areas, right? One is in the area of KYC AML, identity, right? It's about identity. In the capital markets world, that cannot, that is a given. No regulator will say that you can discount that, or you can do something gray or whatever. The identity has to be very clear. The second thing is actually the compliance part of it. How do you be compliant, right? The third part of it is actually, interesting enough, confidentiality, right? Today, a lot of the investors in the private market especially are actually take things very seriously. They want them, what they do to be confidential. Today in the crypto world, actually not very confidential, right? Everything is public. The fourth one is actually governance, right? How do you make sure that there's proper governance in when you apply security tokens? And the fifth one, to Amy's point, is actually finality, right? Such a big market, you cannot afford many transactions to have no finality in a transaction. Today, there are still some work to be done, right? In the crypto world, for example, you can fork and all these things, right? I think if we work closely on these 5 areas, I do think that this whole security market tokenization will actually come about.
Thanks, Chek Peng.
Thanks,
Victor, how about you? What do you think?
Okay, first, thanks for correcting, but may I know 30 is the right amount, right? 30 is the right amount today. Yeah.
I think
anyways,
so.
yeah. So, going to what are the obstacles, right? For me, it will be more on the asset management angle. Back to this 1.5 billion loss in 2021, 50, and the 10.5 billion loss in 2021. It's really the Wild West. So I've been to London and New York over the last few weeks, and you can see that everybody's smelling this, right? So you'll be shocked to see the filings, the attempts that there are. As much as we sometimes hate the regulator, they do a lot of good when things when things have not been standardized, because anybody could become a number one here, and there will be so many investors that could get hurt, and this would taint the industry as a whole. So for me, the biggest obstacle would be, hey, how do you get the good issuances and having a lot of good use cases one after the another, and having big names in there so people get comfort, like the Pygmalion effect. You have one by one, and then suddenly it's 10 and 20 and becomes suddenly the norm. I think that would be number one. Number two would be, okay, right now we are at private blockchain, right? And it will slowly open up. And now this is where all of the puts and calls and all of the derivatives will start kicking in. How do you set a good use case for the accredited to begin with? It will open up to retail. How do retail also make money out of this, from this structure? So once both of them, through good issuances, benefit from this platform, I think that 10-year would be, anybody like ADDX would be ready to embrace the new world. And last but not least, this would come with like every industry has this ISO standardization, right? I think it also needs that same element for the digital exchanges, because right now what I see is in Europe, in the US, and in Asia, it's there are some similarities, but the big trend is very different, right? So the likes of ADDX is, you guys are starting as private, fully regulated, fully licensed. In the US is very it's very fragmented. They start with custody services. They start being tokenization platforms, and then they become ATSs, and some of them they even dream to set up a digital national digital exchange. In Europe, is pretty much. I mean, let's limit it to Switzerland, for example. It's pretty much the stock exchange model being replicated into the digital exchange. So there are three very different rhythms, I would say, in speed. But I think if there are more and more use cases, I mean, all of the banks and managers are global. Once we are comfortable with the parties, right? I think the 10 years will come sooner than expected. So the obstacle will be how do we standardize? As Ami said, it's up to the industry to make it happen. But how do we standardize everything so everybody could come in and benefit from the same systems and same structures?
Yeah, that's a very interesting point, right? Because the public markets have some sort of synthesization and harmonization around how things are listed, what are things to be listed for the retail, the broader retail market. And the private markets, even though in theory it's much larger than the public markets, don't really have that same consistent set of rules yet. So for the newer players like ourselves, it's also upon ourselves to define out of that massive private markets, what actually should be tokenized and allowed to be, invested in a more thematic or in a more sort of structured way. I think will also play out in the next few years, and that will also obviously form part of the thesis as to how this will grow under some guise of a framework or a platform. I think so. I'm going to do one last question to go around before I open up to the floor. So everybody who has questions, please pop them into the comments box. So one last question, which I think it will be a very fascinating exercise in thinking. How do we think do we think that the securities token markets is going to be a single global market? Is it going to look a little bit like DeFi, where it's sort of everybody sort of attaching to each other and trading and all that to different people, or will they remain a little bit like private permission chains, sort of across whether it's the US or Europe or Asia? Or in some experimentation or form between sort of the private permission into the open, into the mainnet. Victor, why don't we start with you? What do you think?
Yeah, it's having been in the three different cases, continent, it's very tough to say. But let me tell you that in Europe and US, especially in the US, there were the industry were quite shocked to know that this actually happened from Asia first. I think the key point here is the behavior and the regulatory body. It's the biggest needle mover. So if you have like I don't know, like a central movement in where all regulation can speak the same language, right? Same standards. I think it will all look like one. And because the cryptocurrency itself, the exchanges they all look like one, right? They can be traded in any country, so that would be applicable in this specific case. However, at the current speed, I think it's the starting point is very different. Asia, for example, in ADDX, I mean, let's say for example, Japan, lot of pilots. Korea, crypto, bad cases. No one is able to launch an additional digital exchange. They don't want to even hear about security tokens. But in Singapore, it's just playing very safe. You have all different licenses, all in one solution in place. As I said, in the States, it's just very fragmented. But a regulator are, applying a view of whatever you do, I don't care what's in the laws. I'm gonna just regulate you and make sure I say no before, no matter what you do, right? In Europe, they don't want to even go to that subject. It's more of a representing what's in the stock exchange to be using the blockchain technology in the stock exchange, replicating that in the digital exchange. That's how it's gone. So for now, it's going to look very different. But if only if the regulator they get comfortable I think it will end up looking like one. But for now, if things stay as is, it's going to be very difficult for every country.
Jackping, what's your view?
Okay. I still remember a couple of years ago when Danny, ADEX founder, and I sat down in a coffee shop near Clarke Quay and we talked about it. This was actually one of the topics we talked about. How is it going to be like? We think that both of us think that eventually there will be regional hubs and regional leaders formed, or platforms formed in regions around the world, and they will then start to collaborate and connect up with each other, and to really then make this into a global kind of like marketplace or platform for investors, issuer to tap on. It won't be one dominate the whole world, but that's how I think about it, and I think Danny kind of like said that as well. Yeah.
Ami, I'm sure have looked for different types.
I think that the questions that you ask is exactly why I started Onera. That's what the company does. Effectively, what we did is beginning of last year, when around April time, we kind of recognized that there's just so many hubs out there, so many players. Each company is doing their own stuff, especially around private market. Nobody thought about how to connect to the other. And it's not just jurisdictions. It's within two jurisdictions, even sometimes within the same financial institutions, two asset classes build two different platforms, and they don't know how to speak to each other. And nobody expects users to hold a user account on 70 different platforms in order to trade. It will never work. So we put together a group under a non-profit organization called GDF, and the group is called the Private Market Digitization Group. This group is open to, so if anybody wants to join, you can contact me. This group is open to financial institutions, and we kept it kind of quiet, but it had all the major banks, all the major asset managers, the big players, and all the European exchanges and US exchanges as well, including the big ones, the big securities exchanges. And what we talked about there was, how do we create a protocol that will enable everybody to trade with everybody, regardless of which platforms they use underneath, because we realized everybody will use different platforms. That was the first thing that we realized, was that everybody's saying, I have the platform, my platform is the best, everybody will use mine. But in reality, it's a very competitive market, and there's just going to be so many. So we created a protocol called FinP2P. Again, you can Google it, FinP2P, P2P, and what this protocol does, it basically, it's like a routing platform. It's like the Swift for the digital era. It connects all the platforms between them, and it allows them to trade freely. It allows you to do three pillars, basically. One is to do primary issuance of assets. You can do a primary issuance in Asia for a specific asset, publish it into the network, and an exchange in the US can pick it up and allow their clients to invest in it. The second thing is secondary trading. It can allow secondary trading between any two clients. And the last thing that we launched about a month ago is collateralization, which enables DeFi-like capabilities where anyone can collateralize any asset against any other assets on the network, including with automated smart contracts, like in the DeFi space, where you can do for the first time things like take a mortgage against your real estate holding, or against your fund holding. You can sell on the secondary, and so on. I think this is a piece of the puzzle that is critically important for that vision to happen, because without that interoperability, we're just going to have a lot of silos that are not interconnected to each other. And a lot of platforms were built as silos. And for me, promoting an interconnectivity platform, it was difficult beginning of 2021, because there were not a lot of platforms deployed. But right now, platforms are popping up all over the place. Connectivity becomes a major issue. People are trying to connect to each other, and they see that it's very hard. They were not designed to be connected. And building a bridge between two platforms doesn't solve the problem, because then they have to build 10 other bridges to 10 other platforms. And that's why the whole idea of FinP2P is one pipe in the middle that everybody can connect to very easily and trade with everyone else. So this is what we're doing to solve that problem that you mentioned. And we're launching it in the beginning of next year, and there's already a lot of assets that are going to be on it. A lot of institutions are going to be connected to it. So I'm pretty positive that this is a problem that the industry can solve, almost on the technology level, and the business level, through an interconnectivity network.
Great. Okay, we have probably time for 2 questions from the audience, and this one I will throw over to Chekpeng because it talks about traditional. Is it feasible for traditional brick and mortar industries to securitize their assets? Is it feasible for traditional companies and brick and mortar companies to securitize and presumably tokenize some of their assets?
Oh, thanks. Sorry. Yeah, definitely for sure. I think that's always feasible when the technology is ready, right? Today you have NFT, for example, right? A lot of traditional companies have a lot of physical real estate assets, whatever. You can put it in NFT and tokenize it, right? One of the reasons why we are very interested as well is because we serve a very large group of commercial banking segment, right? And these are traditional companies. We think there's a lot of potential there, actually.
Great. Certainly, tokenization is here to efficientize capital markets, not just democratize access. So I'm sure there are a lot of use cases for that, and we certainly see a little bit of that on our end. For example, in the pre-IPO space. Another question here actually relates to small markets like the Caribbean and different islands, and how can they also potentially benefit from this tokenization wave. Unfortunately, I don't have the answer to that. I think cross-border is still going to be one hurdle around either onboarding or taking on projects. But I'd love to see if anybody else on the panel might have a different view.
I would just say that the network that we think should connect everybody should connect also the small players. It is about a democracy. Not the problem, but the question is, do they have assets that are interesting for investors elsewhere? If they do have assets that are interesting for investors elsewhere, then yes, definitely. I think what we've seen in crypto was that those small islands and small places, they had faster moving regulatory kind of regimes that allowed people to do things. But that's more of an advantage in a market where the asset is digital, doesn't have an asset behind it. But it's less of an advantage, in my view, with asset-backed securities. So it's really all about the actual quality of the assets that you can bring to market.
All right, great. I think that is all the time we have for this panel. I want to thank my 3 esteemed panelists, Ami, Victor, Chekpeng. Thank you so much for taking an hour out of your time to speak with us today. I think next year when we run this panel, we're thinking maybe we should do a full day. But I'm very happy that we're seeing this space really, really grow up very rapidly from 2020 to 2021. And I think with 2022, certainly very exciting days ahead. Thank you very much for joining me. Thank you, the audience. We will probably start our next panel in 5 minutes. But please stay with us as we have Darius host the next panel discussion. Thank you, gentlemen. Have a great evening, and I will see you hopefully personally soon.
Thank you.
Thank you, Yi.
Thank you. Thanks, everybody.
Bye, everyone.
Bye-bye.
Thanks. Bye.
Good evening, good morning, good afternoon, wherever the world you may be dialing in from, and welcome to the second panel of tonight's Global STO Summit program. My name is Darius Liu, and I'm very, very happy to be your host and moderator for this panel's session. And with me now are my esteemed guests, Dr. Erica Raja, Anthony Woolley, Kevin Lim, and Lomi Ho from Digital Asset. Welcome to my panelists, and we look forward to a very, very engaging session on this panel tonight. Now, the first panel that you may have watched just before this with Oi and the three guests was STO Goes Mainstream. The second installment to that, and the topic for this panel is transforming capital markets with blockchain. Now, there's been so much hype and the excitement around how blockchain and smart contracts and security tokens are transforming and really revolutionizing the way that capital markets infrastructure has developed over the past, let's say, maybe 2 years, and how it's going to transform the industry in the years ahead. And we're very happy to have my esteemed guests tonight to share with us their views on how capital markets outlook will be transformed with blockchain and technology going forward. I'd like to just introduce my guests for tonight before we dive right in. Kevin Lim. Kevin Lim is currently a director in Temasik's blockchain team, and he joined Temasik in 2013. He is really the face of blockchain for Temasik, and he's very heavily in the blockchain team's venture building and capital and ecosystem development activities, and really leads a series of strategic initiatives for Temasik. So welcome, Kev, to the panel. Next up, we have Lomi Ho, experience working with organizations, financial services, and fintech. She's currently the handling sales and business development for cap markets in the APAC region for digital assets. And before that, she was associated with HKEX, China International Capital Corporation, and forms Syntron. So very welcome to you, Lomi Ho.
Nice to be here.
Next up, we have Anthony Woolley, Head of Business Development for Onera, and a co-chair of GDF, Private Markets Digitization Steering Group. And in a minute, he'll tell us, share with us what that GDF, Private Markets Digitization Steering Group is all about. Onera and GDF really brought financial industry together to digitize the entire private markets. And prior to joining Onera, Anthony was the UK Chief Innovation Officer and UK Chief Information Officer for Société Générale, SocGen. And in these roles, he was tasked with a multitude of developmental activities from the fintech and high growth company space. So welcome, Anthony, to the panel.
Pleasure to join you today from a sunny London.
Yes. And last but definitely not least, the lovely Dr. Erica Raja. Erica is an internationally recognized crypto and personal finance expert and educator. And she's really a face that's very regularly interviewed and featured on the likes of CNN, Forbes, Wall Street Journal, Washington Post, you name it, she has it. Dr. Raja is a highly sought after guest speaker, educator, and panelist, and she earned her PhD in personal financial planning from Kansas State University in 2015. Erica, welcome to the panel.
Thank you so much for having me. Good morning, good evening, wherever you be.
All right. My name is Darius Liu, and I am the co-founder and COO of edX. And as we all know, edX is very proud to bring you tonight's Global STO Summit. edX is the first integrated issuance, custody, and trading platform for digitized securities anywhere in the world. And we are very, very happy to be able to bring a very exciting suite of investment opportunities in the private market space to accredited and institutional investors from across the globe. So I'm very, very happy to be here and to host this session today. Now, this session will be an interactive one, right? And as part of that interaction, I encourage everybody to put in your questions that I will then post to the panelists as well as to myself after the first series of presentations and videos from the panelists. So please input your questions into the comment section on your interface, and I will take a look at them and address them to the panelists at the end of the session. All right, so let's make this an interactive and fun session because there's just so much excitement in this space, and I can't wait to begin. So let's dive right in. Now, I will begin this session with a series of questions, and then I will invite each of the panelists to just introduce your organization and your solution for, as it pertains to capital markets infrastructure and blockchain and smart contract technology through the use of a case study. All right, so at the appropriate time, I will invite each of you to introduce your solution by the case studies that we have prepared. But first, let me ask Erica, help us understand the limitations of today's traditional capital markets infrastructure. What is wrong with it? Why should we be concerned and excited about what is to come in technology using blockchain to revolutionize cap markets?
I love that you couch this question with what is wrong. That is a loaded question, but I mean, to be honest with you, there is a lot wrong. I think, one of the greatest concerns, we have in terms of addressing these limitations and, kind of giving, rise to the democratization of finance in general is that, we've really got a closed financial system. It's not transparent. And people appreciate transparency and people appreciate control. And because it is such a closed financial system, it puts control in the hands of others and not in the hands of the people who would really like to be engaged in a system that is innovative. And when we're talking about innovation, one of the limitations of, traditional infrastructure as it exists currently is it just doesn't innovate. It has remained stagnant for years. It is caught up in a bunch of regulatory and governmental red tape. It is held, so many interests are held in the hands of lobbyists who have a number of interests. It was discussed in the Keynote a little bit, but there's a lot of money that is going to be lost. I want to clarify that it's not potentially going to be lost. It is going to be lost to decentralized finance and, the transformation of the way we do finance in the world. And we have these issues of, growing concern around data and privacy security. And that is a huge limitation of current infrastructure because it has high operational risk. I mean, it is extensive and it's unfortunate, but that's the way it is because of this lack of transparency. And so we have a system that's in place right now that is not easy to access. There's a high barrier to entry. We have a number of risks involved, and we don't have any control. And because of those things, this is why we are seeing this shift. And this is why the shift is so exciting and interesting, but also very, very scary to the people who are currently in power over our financial systems.
Thanks, Erica.
In a nutshell. I mean, I have a list of things that are wrong, but I'll just keep it to that.
It's a sobering thought. What you've just shared is sobering enough. But if I just switch over to what's to come, Kevin, what do you see are the benefits of the new way of doing things, right? The digital market infrastructure that's built on blockchain, smart contracts. What is what is there to like about it?
I'm so glad you asked Erica what's wrong, and for me, what's going to be the new benefits. So at least I still walk away with some friends tonight. So hi everyone, thank you so much. Maybe a quick introduction. So I'm Kevin. I sit in Temasek's blockchain team. A key venture that I've been working on for the last 2 years now is a trading between ourselves and FTX called Market. And really the focus there has been thinking about how do we leverage off existing technologies. And I just want to really anchor that particular point in mind, right? Like blockchain is a piece of it. It's a piece of the overall technology enablement, but it should not be thought of on its own basis, because technology at the end of the day is an enabler. It's going to be about the user experience that we're really trying to improve. And when you think about the benefits that can bring about, there's a lot. So first, you can dissect the capital markets into various uses of that. right? You can think about the issuers, you can think about the investors, you can think about all the ecosystem partners today, the banks, the custodians, the paying agents, so on and so forth. And each of them have gone through a particular process. And depending on whom you're speaking to, there are loads of benefits that can be improved. And I'll just name a few, right? So, because I know we do have a tight time today and we can't go through this full laundry list. But to start off, if everybody is on a same common ledger, I think that's the whole promise of less reconciliation, less manual errors, and that's incredibly powerful. Now, if you enable the possibility of smart contracts, you can have automated enforceable contracts without human intervention. That puts more trust into the system. And I think to Erica's point as well, you need certain intermediaries. Can you bring down operational costs, right? These are things that we can think about. And from distribution standpoint, for various reasons, there's going to be a cost today for us to reach out to a wider range of distributors. Now, if you actually have something that enables people to have and create their own wallets on the go, or have easy access for them to pipe into existing platforms, you actually reduce the burden on that front itself to have a wider distribution outreach, to have smaller transaction sizes that could be more palatable, especially to small investors or investors that does not have such a huge balance sheet. And I think the possibilities that we're all thinking of is that with the current advancement in technology, if you bring various pieces together, and some of that is not even blockchain enabled, some of that could be digitalization of processes, automations and reduction of workflows, coupled with blockchain, right? You have powerful new possibilities. And I think that's really what we're all striving towards. How do we bring all of this with the right partners to the right target audiences that we want to actually move forward with?
Thanks, Kevin. Very exciting. Now, for those of us who has been, swimming in this space for a while, you would have heard this term end-to-end, right? That's one of the promises that digitization of capital markets infrastructure purports to bring. Now, Lomi, can you please explain to us, for the benefit of those who may not be familiar with this term, how would you explain this idea of end-to-end in the digital asset lifecycle?
Sure, it's really been nice to be there. So actually today I'm quite excited because this is my first day about quarantine in China. I'm quite a fintech savvy, so it's more easier and the convenience technology bringing is also the same logic in the blockchain technology or innovation technology. So coming to questions, what is the end-to-end digital asset lifecycle, which means digital from to the back. So I previously working the bank, I can understand how to end-to-end journey is really meaningful to digitalize the from office, middle office, and the back office whole end-to-end workflows. And this is that really to bring the efficiency from among the different desks, also the different maybe internal and external parties. And from asset lifecycle itself, it means we can use this end-to-end digitalizing to cover the asset lifecycle, for example, asset insurance, asset distributions, asset custodies, and entire lifecycle events to bring the user experience and better, faster payment, faster settlement to create a seamless and efficient platforms. So, and also as in the digital asset, we're seeing our clients, we wanted to highlight 2 points today here about this end-to-end digital life cycles. First thing about the automating the corporate actions, because we know this complexity of the life cycle handling in the traditional database is a really the huge problem and solved not very well in the traditional FI servicing. So which means is among the today panelists, we're solution providers, huge opportunities we can bring this digitalization way to provide the fintech solutions like we can use the smart contract or plus a DLT or smart contract plus DLT plus IoT to bring the asset lifecycle events on the asset itself and to tokenization and to among this smart contract to execute the lifecycle events on the chain to automate and orchestrate the multi-party workflows, then which mean can bring the more efficiency and better user experience. And also the secondly, we are seeing that from some ESG project, we're seeing this end-to-end digital life cycles also opening the doors to like the provable and the traceable assets. That's the meaning is like really missing elements in the ESG asset classes, which just mean we can use the smart contract or tokenization way to bring this visibilities and transparency into the ESG space. For example, from the government green bond and to the sustainable aluminum and tokenization done right and with the privacy and safely control, we can bring the investors full visibilities about the green impact. So for myself, I as a millionaire, I wanted to invest money in the green industries, but I wanted to make sure this money is clean and there are no greenwashing and my impact is real and we can make this motherlands more greener. So I guess that's the most important things. Maybe lastly, I wanted to touch on about the investor personas, because for the investor, we really wanted to have like financial institutions provide us for like the better onboarding journeys and the more variety asset classes tradable. For example, we can use the same app to trade in the different digital traditional asset, also the native digital asset within the same app, and also to bring our investor user experience by this end-to-end journey like more happier, safer, and faster experience. Yeah, and then that's the end-to-end simply explained.
Thanks, Lomi. So in one sentence, I can summarize it as better accessibility, higher efficiency, lower cost, and that translates into a higher return for all the users. What's there not to like? Hey, I'd like to just dive in right now to the case studies as promised. But before that, just a general reminder to the audience, please keep those questions coming. I see the questions coming in already. Take a moment to think about what you'd like to ask the panelists. We have a really esteemed group right here. Type it into the comments field in your interface on screen. Now, without further ado, demo that we'll explain to you what that is shortly. Lomi, please explain to us what the demo and Project Genesis case study is all about.
Sure. So, and actually today we bring a video to kick off this high-level overview. So maybe basically touch on. So Project Genesis is the jointly run on the BIS Hong Kong Innovation Hub, also together with the Hong Kong Monitoring Authority. And we just happily announced in the Hong Kong FinTech Week. Would you mind, Doris, maybe you can play the video first, then I can jump in on the detail afterwards.
Absolutely.
Thank you. I didn't hear the voice. Is any voice is coming?
Just one moment.
The sound.
Yep. Just one moment. We'll be playing the video.
This new digital infrastructure will not only offer greater efficiency and transparency across green investments in the Hong Kong market, it will also help issuers and governments meet their environmental and sustainability goals. To alleviate many of the complexities associated with green bond issuance and to demystify uncertainties surrounding green impact, BIS and HKMA launched Project Genesis, a green bond issuance prototype that utilizes digital assets core technology offering, DAML. DAML is a multi-party application platform that uses smart contracts to simplify complex business processes while also making data more accessible. Through DAML, blockchain, and IoT, the Project Genesis prototype is able to share real-time data across the green bond lifecycle while eliminating duplicative processing.
Our first goal is to empower retail. We want to make possible investing in government green bonds in a simple way via an app that shows accrued interest and green impact in real time. Furthermore, we want to empower retail to own green bond finance projects in their neighborhood.
Our second goal is to foster achieving Hong Kong's green targets. The Hong Kong SAR government has set ambitious carbon emission reduction goals. Tapping retail to realize aspiring green projects helps Hong Kong to fulfill its climate obligations under the Paris Agreement.
Our third goal is to explore and foster a new financial ecosystem. Distributed ledger technology is becoming an important building block of future financial systems. Project Genesis helps familiarize market participants with this new technology architecture.
In addition to All-Infra's IoT platform, Project Genesis will leverage Octopus, Project Genesis demonstrates that digital assets residing on blockchain can enhance efficiency by shortening bond settlement from T+2 to near real time, while also connecting the segregated order books managed by multiple banks and brokers.
Thank you for that video. Lomi, back to you.
Sure, and thank you. So yeah, and very happily to play this video. So maybe highlight several stakeholders and what the prototype we're focused on and who is the solution provider for this. So as the video mentioned, this is the joint run by the HKMA and together with BIS Hong Kong. And also there's several the stakeholders we very luckily work with, like the Korean Rangers, like Data Chadas, HSBC, and also some advisory from Hong Kong Exchange, and also some like PwC, different advisory group. So, and the solution providers, we together with GFT, so digital asset together with GFT, building this insurance and among this green bond from insurance and from the subscription and also the closing period, and also as well as the secondary trading for the whole prototype. But the most highlighting also about the data green impact, because we also partner with the green data provider Olinfor. They provide IoT data to visualize the investors how's the green impact you have. So there are three key features maybe highlight also after this video. So first things about the tokenization. So we little touch on previously about end-to-end journey. We mentioned tokenization, so which means we use the smart contract plus the blockchain DLT technology, also the data to tokenize the asset to among this whole asset life cycles. And also for the bond asset itself is like the standardized the bond term sheet and also the different life cycles, starting the subscription period, starting the settlement period, different kind of things. And also the second features about traceabilities. So the video last mentioned about the octopus. So we're also very luckily including the octopus within this prototype, because octopus in Hong Kong is a very common wallet we use the day-by-day transportations. And we can imagine in the future we use the octopus wallet money to buy this green impact within the small domination. Also the one key feature saying that this prototype, maybe 100 Hong Kong dollars in the octopus. And we can see how the green impact in the future, this money invested in, for example, how many amount CO2, how many clean energy you produce, this kind of the diagram chart or like the green impact data you can visualize in your mobile app. And also the third thing for our prototype building for Genesis is about the interoperabilities, because we focus on the prototype among the private permission chains, but we cross the two permission chains. One is the Hyperledger, the other one is the Basu. So we use the Canton as the demo and digital asset and invent the interoperability called the Canton. We cross this multiple chains, which means in the further future next generation technology, we allow the different application to interconnect with together to develop and do not have any locking of the any tokenization applications. So, and the last things, this prototype will also comply with the Hong Kong laws. So we are no delimiting any parties. We just provide efficiency and to reduce the cost. Yes, so that's basically in high level about the Genesis, and just more further detail you can check in the BIS Hong Kong website. And also among the digital asset, maybe I just use the last 2 or 3 minutes to highlight. So for us, 6 of the 10 top 10 exchanges is our client. For example, Singapore Exchange and the Hong Kong Exchange. Also, we with the Tamamask together previously on the corporate bond insurance among the Singapore Exchange market. And for this year, we'll also likely be chosen by the Deutsche Börse Exchange, German exchange, to develop a whole D7 decentralized digital infrastructure. And also, we also enable the Nasdaq marketplace for the digital asset applications. So, and extra, there are several clients we have in the market. And just the last month, we announced together with the Goldman Sachs, how Goldman Sachs tokenized the asset infrastructures, use a demo to building this whole called end-to-end tokenized asset platform. So basically, we're saying that this whole financial institution is very keen and very to exploring to this technology, how to help them to bring the Erica and the Kelvin touch on the efficiency and the lots of the benefits they wanted to really to innovate these financial markets. Yeah.
Thanks,
So
Lomi. Super exciting. Now, a lot has been said about technology and the innovation in technology. And for the edX case study that I'm about to share with you next, I want to touch on this point that to bring about, revolutionization of capital markets using blockchain, it's not just about the technology, right? A lot of other planets have to align in order for security token offerings and digitized securities to take place. And one of them is actually innovation in the legal structuring space, right? So I just take a little bit of a detour here and share with you how we have structured some of our security token offerings to bring about, the benefits for our users. Now, the first case study that I'd like to bring about and share with you is what we call hybrid digital securities. Now, this basically is a structure that allows the issuer to use their existing legal documentation and their existing, LP arrangements. But at the same time, we take on that, we, meaning edX, takes on that role of a custodian and the issuer of what we call depository tokens to the investors. So it's basically a pass-through. And it may sound simple and it sounds a bit like the nominee structure that we see in traditional capital markets, but trust me, it's a lot of non-trivial legal innovation that has gone on behind this. So what this basically represents is a structure that allows for edX to be just like any other LP in, let's say, for a fund or any other bond subscriber alongside other institutions. But at the same time, the investors on the back of us on our platform will get all the benefits of the economics behind the bond or the fund, as the case may be. So that's the first use case, hybrid digital securities. And if I go to the next one, now this is truly exciting. This represents when we say digital native securities, it represents the truest manifestation of when I say digitized securities. In this construct, the issuer, be it a fund issuer or bond issuer, as the case may be, they issue tokens represented by smart contracts on the blockchain that take on the form of a token, but have the rights and obligations of a bond or a fund unit, as the case may be. So when people buy into, let's say, digital native bond issuance or digital native fund issuance, they are actually buying a token that is a smart contract that's deployed on the blockchain, a token, but that token represents a bundle of rights and obligations that becomes the bond or the fund unit. And this really is a revolution, right? Because by having digital native securities, and we do have a fair share of them on the edX platform as it stands, and more to come, this really brings about the maximum amount of efficiency gains and productivity, and therefore translates to the greatest amount of cost savings and return enhancement for the issuers, for the issuer and the investors. So keep this word in mind, guys. Digital native, right? That's the way of the future. And with these two use cases, I wanted to just showcase that it's not just about tech, right? It's about operations, it's about compliance, and also it's about the legal structure and innovations thereof that will bring this whole industry to life. So that's the edX case study. And moving on, Anthony from sunny London. I'd like to invite you to share on Onera and FinP2P and tell us a bit more.
Sure, thank you. And I think you've probably got 2 or 3 slides just to help with that. There we go. Very good.
Yes,
and I think if you were listening to the panel earlier, you'll have heard from my colleague Ami, and both Ami and I have been involved in this space for a number of years. And what we realized is that for this space of digital security tokens to really take off, it needed 2 things. It needed to go institutional, and it needed interoperability. I think we can see over the last 2 years the emergence of initiatives. Everybody has a digital securities initiative. Now institutions are getting serious about this space. And we're very much focused on initially opening up the private markets. And if you look at the private markets, the level of distribution that it needs, it's not sufficient to have these initiatives sitting just on one blockchain technology, one pool of investors. We really understood that we needed a way to deliver that interoperability. So what we did, and this was the beginning of last year, really in the wake of COVID, we joined forces with Global Digital Finance, GDF. If you don't know them, this is a fantastic global not-for-profit group working with regulators, governments, institutions, and the fintech industry to promote what's going on with digital finance. And through that, we brought the industry together. So the largest financial institutions, buy side, sell side, the largest exchanges, and fintechs that are leading in this space, with the objective of interconnecting the institutional industry so that we can solve that problem of interoperability. What did we do? The group together developed an open source decentralized protocol that we call FinP2P, Fin Peer-to-Peer, to enable instant trading of any asset between digital wallets across the institutional marketplace. So this is across any asset class, any underlying ledger, any settlement currency, any digital custody technology, issuance or exchange platform, and making sure that all of that can happen in a regulatory compliant way. So at the point at which you do a transaction, you're distributing an asset to an investor, it's appropriate asset being distributed to appropriate investor. How did we do that? Take me on to the next slide. FinP2P, in simple terms, is a very thin routing network where every node on that network is a regulated institution, regulated with the licenses to do what it does best. It could be a bank, an asset manager, an exchange, somebody handling issuance, somebody dealing with secondary trading, but whatever it is, an institution's running nodes carrying the licenses that they need. Next slide. And we have adapters into FinP2P for any type of underlying asset environment. So distributed ledgers, whether they are holding digital assets in a public blockchain environment, whether they're holding digital assets in a private blockchain. And indeed, FinP2P will work, as seen on the right-hand side of this diagram, if there's appropriate technology with assets holding on centralized ledgers with regulated institutions that can provide the level of trust regarding those assets sitting there. Last but very much not least, on the left, you're going to need a means for paying for the securities on this network. And so FinP2P handles any sort of digital cash, whether that's pre-funded fiat accounts, whether that's stable coins, or the commercial bank and central bank-backed currencies are all looking forward to emerging in the coming years. How does this work? Well, then at the top of the slide, you can see that investors have wallets. And again, Ami was talking earlier about the fact, today across the industry, investors, the industry works off accounts, right? Bank accounts, but they're really records sitting in the databases of the back offices of banks. In the future, we have a vision where we see the industry moving to wallets, right? Every investor will have a digital wallet. And what they're able to do with the routing network is hold in that wallet assets that may be sitting in any one of those different environments and to settle them in real time with any form of suitable digital cash. We part of the principle of this whole environment, those assets don't move out of those individual environments at the bottom. We think that you have different environments with different attributes, different velocities, etc., around those assets. Furthermore, in a regulated environment, you have registrars, transfer agents, etc., responsible for the record of ownership. So this isn't an environment where you're trying to atomically move assets between these environments, but it's a very practical environment where investors, wherever they may be, can hold assets in their wallet from different environments, such that you can take any suitable investor, any suitable asset globally and connect it to any suitable investor globally. And we think this is a practical way that provides a method to take us forward initially around digitization of the private markets, opening up the private capital markets, and then providing a blueprint for transformation of the public markets.
Thank you, Anthony. That sounds truly transformational, and it's really a big step towards a global market infrastructure. So thank you for sharing that. Our fourth and definitely not least case study would be the Temasek case study, MarketNote, right? MarketNote, for those of us in the Singapore scene, has been making waves lately, and of course has been mentioned in various speeches, including one by the managing director of the MAS. So Kevin is here to tell us a little bit more about what MarketNote is and what it can do for you.
Thank you, Darius. And again, thanks everyone for listening to me. I'll try to keep it short, really, because I know we have a list of questions coming in, right? I want to make sure that we have time for those. But before I jump into the next few slides very quickly, I just want to provide a frame of thinking, right? So I think Lomi have shared, and I think Anthony has shared as well, in terms of what are some of the tech enablers do we bring about to have this vision of end-to-end digital assets fully aligned. Darius have also talked about the case of legal construct, and it's by no means feat. How do you bring about legal construct whereby in certain jurisdiction, certain institutional investors specifically, and even for retail people, you are comfortable as to what you're investing in? My sharing on MarketNote is going to take a different frame, if I may. It's going to be a little bit off tangent in terms of just talking about global security tokens, but I will just review very quickly as to why I think it's going to be useful. Next slide, please. So again, our vision statement itself is, as Darius have articulated, likewise, we believe in creating this end-to-end digital asset market infrastructure. We're backed by Temasek and SGX, and we actually think that the neutrality that we bring together with all partners will allow us to bring this vision to life. I think the key point I really wanted to highlight here is that we do not think that we are able to build the full end-to-end infrastructure. It's not going to be a monopoly. It's going to be a coordination of efforts via different partners bringing this vision to life, right? That point has to be reinforced. Next slide. And this is where I wanted to just share that framing that I was going to talk about earlier. So the way we think about it is, yes, there's tech enablement. Yes, we have to get certain hygiene factors right. And we need to be able to have the right legal construct. All those are important. But the fundamental question that we have is, why do users care? And that goes back to my earlier sharing. Who are the users? We have to define that. And I think depending on whom you're speaking to, there are a range of pain points and new possibilities that they really care about, right? So we start with the user in mind. And what we have here is the A to E component of our end-to-end infrastructure. We think of it as market access to different groups out there. We think of leveraging of blockchain to enable instantaneous possibilities, right, that we've talked about some time there, and a wide distribution outreach. Cloud and deployment, so it's a lot faster as compared to on-prem solutions that the world is used to, especially for a lot of the legacy infrastructure. Data. And data is really where I think a lot of the people we're speaking to, they want analytics. They want to be able to derive sentiments, insights from it. I think that point cannot be forgotten. And finally, on ESG, right? Just echoing the point that Lomi was sharing earlier as well. ESG as a construct for the whole capital markets is a big theme. And how do we address some of these pain points for the users? Because they likewise have shareholders, they have investors that have to account for it. Next slide. So this is where we play. Effectively, what we've tried to do is that we've dissected the whole value chain for, let's say, fixed income, all the way from pre-issuances to secondary trading. And I won't bore you guys with details into the specific offerings, but effectively where we think about is we want to build in a modular fashion to provide value for various end users across each bucket of the value chain. I think that's the key thing here. Next slide. Our user journey so far, right? We started in 2020, and much of 2021 has been very much focused and built. The core thing that we wanted to call here is we've since done 3 digital bond issuance in a parallel world for Olam, for Singtel, and UOB. And in September itself, we've announced a partnership with 10 banks. And December onwards, that's where we have the launch of our suite of products, and all this will go into 2022 and onwards. Next slide. Some of the key stats that we have in terms of the notional that we've issued and some of the tech collaboration, further reinforcing the point, we're not looking to build alone. We have to build in consultation with the group, and we have to find the gaps, right, that we actually want to tackle. And the final one, please. Yep, so this is the final slide that I have. Some of the upcoming offerings that we have on MarketNote. Interestingly, right, digital assets is on the right-hand side, and it forms one component of this various offering. So this particular key slide that I wanted to talk about is less about the details, but the thinking and the framing, which is fundamentally digitalization, automation, plus blockchain and the concept of digital assets all come together to create a better user experience. All come together to really create new possibilities that previously was not possible. And I think it's with that vision in mind, if you start from that particular perspective and you bring in various additional utility, bring in benefits that people care about, progressively you're going to get adoption. And adoption itself is going to be pretty key. And that's where you tie in the various tech pieces, that's where you tie in the legal structure, and you tie in with various partners to really grow this overall market itself, right? So that's the frame I really wanted to share with, because tech and legal and market adoption can't be done in isolation. All of it has to be brought together holistically and with willing partners for us to be able to drive the journey forward. Thank you. That's a sharing from my end.
Thanks, Kevin. And thanks everyone for sharing your exciting case study. And for the audience, the reason why we have brought on these case studies as part of this panel is to really drive home the point that change is happening, and it's happening now. In fact, it has already started to happen, right? And the pace of change will only grow as the saying goes, right? Change happens slowly and then suddenly. And that point of change happens suddenly is coming closer and closer, and it may be closer than you think. It may already have happened. So we spoke a lot about tech, legal structure, operations, and everything. One of the key things that we haven't yet really touched upon is regulation, right? And I'd like to bring Erica back here, right? And I'd like to ask you, how can we, meaning financial sector players in the fintech space, in digitization space, effectively work together with regulators to accelerate the adoption and the acceleration of this positive change?
Also a very loaded question. I love these questions. Well, I think, together we are a group of people who are very like-minded and are very passionate about bringing this to everyone. The biggest hurdle we have together as a group is understanding that for us to help regulators globally embrace the spirit of decentralized finance, embrace this idea that they can also innovate alongside us, it's going to take a very, very intentional effort on our part to help advocate our cause and educate them in a way that does not scare them. I think that's one of the biggest hurdles we have, is trying to help them understand that we're not here to put you out of jobs. Yes, we are going to take your jobs, but let's help you find other ways to do this. There are other ways to help them innovate. Earlier I had mentioned that, one of the biggest limitations we have in our traditional financial systems is that we just do not have this open, transparent system. We have limited innovation. We have a lot of people who are scared. We have so many things to consider here. And because we are on the forefront of leading the passionate, drive behind this, I really do think the onus is on us to help regulators get the context they need to help make very important decisions. One of the biggest things I'm personally concerned about, is the current infrastructure bill that was just passed in the US. That is a giant concern of mine. And part of that reason is because what I see currently, and we got a couple years before things, get into place, but what I see currently is that we're applying antiquated traditional finance rules to a system where we've got people who don't understand the context. And so I think it is our job to help regulators very intentionally understand and be the advocates and educators for them, help them establish new metrics for measuring what, success looks like. They're going to transform. We can help them transform. And I think instead of us, we don't have to, it doesn't have to, be two sides of a battlefield. We can come together, but for us to do that, we are the ones who are going to have to help. And we're going to have to take that concerted effort to do that. Part of that too is helping them understand what the dangers are to their system if they push back against our help.
I just, if I can just echo that, and
Please.
I think, you know, it's key that we work with the regulators and also sit their side of the table a little bit and understand and talk to them about, you know, how we can help them meet their objectives, right? And their objectives are fundamentally protecting the investor and promoting financial stability. And we should also recognize that right now, would I advise my mother to invest in crypto? No, I would not, right? Because I don't think there's the level of protection, safeguards, it's too complex, etc. So we know we need to be in a different place, but we need to work with and educate those regulators around the world so that they don't take knee-jerk reactions and don't do things that actually shut off that innovation. But the key to that is working with them, not against them, right?
I can't possibly agree with you more, Anthony. You know, I think one of the biggest misconceptions that actually exists out there is that we're somehow anti-regulation. And we're not anti-regulation. We see the value in regulation. We just need to think about regulation in a different way. So, I mean, excellent point, Anthony.
Yeah, we're all on the same side. We just want to build a better financial system.
There's a better way to do it.
All roads lead to Rome. Let's work together. Couldn't agree with you guys more. Excellent. Now, I'm looking at the clock and I'm looking at the number of questions and I'm starting to feel a bit frightened. So I'm trying to get through as many of these as I possibly can in the time that we have left. So maybe I propose this to maybe Kevin and Anthony. Right? I'm a traditional financial institution, bank, broker, whatever the case may be, and I want to get onto the bandwagon. How should I think about going there? How should I think about, you know, taking the first step?
I'll start first. I think the fastest way work with Market-Note, get my name, get my number. I'm willing to have a follow-up conversation. But just aside, I think it's really not about building an isolation. Really, if you are keen to build it as an infrastructure, as a utility, band together, right? Ideate, tap it out together. I mean, to Erica's point and to Anthony's point, a lot of this is still in the white space. We are trying to discover things as well. We're not trying to really have a case of trying to say you're the right way or I'm the right way. It's about discovering together and scaling volumes onto new infrastructures that could provide better experience at the end of the day. I think that particular approach, trying to find willing, like-minded partners, is exactly. Anthony, over to you.
Yes, thank you. Yeah, and you know, I talked a little bit earlier about FinP2P, so maybe I'm biased here, but you know, I would encourage it. Institutions, I think, are understanding this is now serious. I think that the problem for them is knowing which step to take, and I think they've been a little bit paralyzed because they don't know which DLT or blockchain technology to use. If they back one, they don't know whether they'll be running down a cul-de-sac, as we would call it, you know, down a dead end. And so that's held them back somewhat. And then on the other side, you've got all the regulatory concerns and the messaging coming from top of organizations, from CEOs, is to be very cautious. They can see various risks. But I think what we're collectively showing now is the way that institutions can engage, right? You can see ADX carrying the regulatory licenses to start really and have started issuing high quality assets. You can see digital asset providing, you know, common programming language, so banks can code against their systems to connect to different blockchains. And then we would like to say we're providing this routing network that means that if you dive in and you start working with one particular private blockchain technology or whatever, that there is a route for providing access and reaching your investors. And I think one thing I would say is in a lot of these conversations, we focus a lot on the assets. How do we distribute assets? How do we make assets interoperability? That's not really the requirement. The requirement is how do we provide access to investors? How do we enable investors to access assets wherever they may be? And I think for institutions today, that's now becoming possible. Obviously, any institution wants to know more about FinP2P. We're talking to many of them, but please get in contact with myself and we can expand on our vision of this regulated environment where any investor should be able to access any asset globally.
Yeah, maybe I have 2 points add on because I think this is a really good question. So point of view, I think institutions or financial traditional companies, they should be bring this awareness, I will say, because like people open to talk, people to open to like study a case study from the companies like among these panelists, these companies like us, and also like they are open to learn about the use cases and also together with different partners and multi-party parties involved in this and go into market. For example, I'm thinking Hong Kong Exchange, we're dealing with the Stock Connect Synapse revamp. And that system is actually among like buy side and sell side among the asset managers, global custodians, local custodians, also the order brokers, and the CCPs, clearing participants. So going together with your parties and together to learn the case studies and to maybe to study some road shows and case details with the solution provider like us. And the last things I think also like open the mind for the talents, because I still remember when I work in Hong Kong Exchange since 2018, I firstly heard about Innovation Lab, and the Hong Kong Exchange opened this door to embrace the innovation technology, how to have the whole Hong Kong listing companies and also the secondary tradings to adopt the innovation technology to do the transforming. And also that's the first time I heard about the digital asset. So I'm started thinking about what is the smart contract, even from the computer science background, but I don't know this idea. I don't know what is this technology. So I guess it's like the opening for the talents and bring the awareness and go together with your parties. So it's really, really the 3 points that I wanted to highlight for the FI and the exchange. Go to this transforming trendings. And really good question.
Thanks all. Now, I have time for one last question. I'm going to make it a slightly fun one. Now, to all the panelists, right? In 1 to 2 sentences, if your mother comes up to you tomorrow and says, you know, I've heard about this thing called digital securities, digital assets, and I'm wondering if I should invest some of my hard-earned life savings into it. What would you say to her? 1 to 2 sentences from each of you.
I think I already answered the question, and I didn't know you were going to ask it. If it's in crypto, I would say no, not today. But I think that in the future there will be very powerful use cases. For instance, borrowing against or pledging, equity in a home to gain investment. These sorts of things are going to emerge, but right now this environment is not really accessible to my mother yet, but give it a few years and I think it'll be safe to do so.
Cool. Who's next? Kevin?
I would say yes, but do it in diversified manner, right? Don't put a full life savings into it. That would be foolish. And probably introduce her to this nice gentleman called Darius Liu from edX, where she can look at some securitized tokens as well.
I would do the same. Lomi?
I would say like the world is changing, and to learning about the smart contract and the other ABCD tech smart technologies and working smart. Yeah.
Thanks. And Erica?
My mom is actually retiring this year. She's only got another month and a half or so left. And she actually asked me this question the other day. She goes, I don't know when I'm going to die, Erica, but I've got another probably 40 years. I want to look at my financial plan a little bit differently. Can we sit down after Thanksgiving and talk about this stuff? And I said, sure, let's do it. But yes, the answer is yes.
Now you know what to say. You have more data points to back you up.
Right.
I think the key point is right now is that in the past, investors have had to go into this world of crypto alone, right?
Absolutely.
And now we are getting to the point, to Kevin's point, that you can introduce them to trusted regulated institutions. So I think they'll get, my mother will get the benefit when she doesn't have to know what all this world is or understand it or understand what crypto is, that you can talk to an ADX or another regulated institution and be protected by them in terms of how they invest and into this world, right? That's the key.
Absolutely, it's fast becoming mainstream, and the time is now. The time is now. And on that note, thank you very much to my esteemed panelists, Erica, Anthony, Lomi, and Kevin. It has been the most enlightening and entertaining session, and we look forward to the next panel, which is coming up in a couple of minutes' time, hosted by our very own Alexander Lee. So look forward to that, and stay tuned. And for now, thank you very much to my panelists, and we hope that you will stick around for the next panel. Thank you very much, and till we meet again.
Thank you.
Bye-bye.
Thank you.
Bye. Bye.
Welcome to the third and final panel that we have this evening. We'll be looking to understand what has unfolded in this booming industry. I think we heard from two very interesting panels. The first one was STOs in the going mainstream, and the second one was transforming capital markets with blockchain. Now, this panel, we will look back at this year as how we have sort of grown in the industry over being affected by COVID. And then we'll look ahead, saying how will this trend continue to propel us forward, especially go into 2022. Now, with me tonight, I'm very excited to welcome back the same esteemed speakers of last year's Global Security Token Offering panel, Alex Nascimento, Baxter, and David Lee. Welcome back. So I'm just going to give you
Thank you very much, Alex.
Yeah, thank you, Alex. Welcome. I'm just going to give a very short introduction to our speakers, run through quickly the bio so that we know who is the one saying all these insights. And then maybe you guys would like to connect with them on LinkedIn or their social media right after. That'll be easy to find. So our first speaker, Alex, I think some of you might be familiar with him because he is very popular on many conferences. Every other week, I see him posting that he's going to speak on another panel. So I'm very glad that he has managed to make time for us today to be on our panel with us. So he is the best-selling author and blockchain faculty at UCLA. He lectures about blockchain business applications and security tokens. In addition, he's also the managing director of 7cc, which is a blockchain investments company. And next, we have Baxter, who's also a best-selling author with his book, Digital Finance. He's a managing director with Honeycomb Digital Investments, where he produces and tailor-fit solutions for his clients regarding digital securities. And lastly, we have David, who is, same like me, from sunny Singapore. He's a professor at SUSS. He is also at the forefront of experimenting in the digital space, especially in the new popular metaverse. He is also chairman and key members of many fintech and blockchain associations. So welcome, guys, again. I think let us just start with a very simple question, right? How do you define security tokens? Perhaps Baxter, you would like to take that.
Sure. I think the easiest way to think about security tokens is just to realize that they are the equivalent of a paper-based security. So if you think about what one share is, think about just one token representing that same ownership in an interest of whatever the economic entity may be, whether it's a stock, it's a bond, it's a piece of real estate, intellectual property. The options there are limitless. And with the digital nature of the security, you can program on top of a blockchain and therefore embed contractual obligations. You can embed all kinds of other types of compliance and really make a much better, faster, cheaper way of transferring ownership as well as issuing and maintaining these securities on the digital ledger.
Now, thank you for that. I mean, yes, I totally agree with your meaning. I think it's the same one that edX aligns, because the reason why I asked that, because we have maybe some beginners in the crowd, and if you Google maybe digital assets or security tokens, sometimes the definition is a bit gray. Some people say it means a certain thing. They include cryptocurrencies inside. Some people say it's just real assets that is tokenized on the blockchain. So just wanted to clear that out. Thank you for that. So as we look, let's just start this conversation by just looking back at the pandemic. Now, how has the pandemic affected STO adoptions? Maybe David, would you like to give a go at that first?
Yeah, sure. Go back to the definition of security token. I think it's important to realize that when we talk about security token, it is a regulated digital asset that is being tokenized. So we have to accept that, because a lot of other things that we talk about, the underlying asset is not regulated. So it's important to understand that the security token is regulated and is tokenized. It is a digital asset that is tokenized. And you notice that I use the word digitized and as well as tokenized. And there is a difference too, because a digitized asset is on a centralized server or just a centralized exchange, right? But however, if it is distributed, where there are many different parties with different interests acting as nodes, then we are talking about a token. So a token has to be on a platform or on a network, not so much a platform, but a network that actually have different nodes with different interests. I think that has to be very clear in our mind what a security token is. And if you look into that, we can see that the pandemic has, in some ways, has not really affected the security token adoption, because you still can tokenize assets, and you put a digital asset onto a blockchain. The pandemic doesn't actually really affect you as much. But however, if the security requires audit, physical audit on site, and to ensure that this security is actually has to be audited in a way that we have physical presence, then you do have an impact on that. Especially you have for example, a global company that has many operations in many emerging market, and you are not being able to be present in those markets to audit, then I think that has got some negative impact, and you have to do a lot of clarification and risk disclosure. That is the negative part of the pandemic that has affected some of the security token adoption.
Yes. In other aspects, in our daily lives, the pandemic also helped to accelerate some of the digital aspects of things. You realize people are more comfortable with online shopping. They're more comfortable with whipping up their phone to check in at places, because Baxter and Alex in Singapore, we use our phones. So we have a Trace Together app that even elderly are used to whipping out their phones just to check in at places, so that it's easy for COVID tracking. So thinking about this, that how digital has really accelerated our everyday lives, how is it like in the US? Do you see the pandemic really pushing digital securities in a whole new level over the last year? Perhaps Alex, would you like to take that?
Sure. So in the US, I think that the most relevant security token offering that we saw during the pandemic, or to the later part of the pandemic, was the Exodus token. Sorry, which some of you might be familiar as like the crypto wallet that has about 2 million users. It was listed on T0, which is the most prominent security token ecosystem in the US. And I thought it was an interesting thing, because all of us here have been researching and promoting security tokens for a while, but you end up in kind of like competing with other blockchain or crypto projects that have a community, right? And security tokens today are a digitalization of an investment contract. So there's a lot more traction in general crypto projects than you see in security tokens. But the idea of Exodus was that Exodus brought its community to T0, bringing like all its users to buy digitized shares of the company, right? In the US here, it was issued under Reg A Plus, which is capped at 75 million per year. And the 2 million users that Exodus promoted its security token for oversubscribed the entire round. So I think that in that trajectory, you will see more and more projects that have a community issuing security tokens and bringing more liquidity to the market. I think that was one of the examples we saw here in the US, and I'm sure Baxter has other comments to that.
Yeah, I would just add, I think that the pandemic served as a wake-up call behind the scenes for a lot of regulators and for a lot of people who are in the legislative and executive branches of our government to say, hey, we really need to rethink things. We know that a lot has to be implemented to make that happen, but this is a good time for us to say, hey, look what happens if we have a pandemic or some kind of a crisis where people can't get out of their homes to trade and interact with business, where we can't have people come to work and perform manual tasks, types of functions. Digitization was seen as a way to alleviate those kinds of problems in the future. And so it's really, if anything, it started a conversation at the highest levels of power. And it started to get people, again, strategizing, thinking about what was happening, and really starting to take blockchain as a whole a lot more seriously. They realized there was much more that you can do with it other than just utilizing it for cryptocurrencies. And just to give a little bit of color on that, I went to a conference in Austin, Texas, probably a month ago. There were 3 US senators at the conference talking about what were the next phases of crypto, of blockchain. And they're saying, look, we don't know what to do. We want to ask you, our constituents, to come to us. We have an open ear because we realize, look, this isn't going away. The technology is very real, and we need to come up with a framework. And so I think that just change in sentiment, change in attitude that the pandemic has brought about has really got the ball rolling in the right direction to make this stuff happen even faster than it would have under normal circumstances.
So Baxter, just to add on, you said that these centers, they don't really know what to do about this new nascent space. It's so fast growing, so innovative. So looking back this year, what are some of the key highlights in terms of technology-wise, in terms of regulations-wise, that really help to propel security tokens in this industry?
Yeah, I would just look at the infrastructure bill that the United States government was debating over the last 4 months. It was a multi-trillion-dollar, not billion, trillion-dollar package. And one of the things that was causing a delay more than anything else was actually over the regulation of digital assets. Now, it mainly pertained to cryptocurrencies, but there was some key provision in the bill talking about who was a broker and would nodes on a blockchain be considered, would they be considered brokers and therefore have to report various items. The U.S. Senate has 100 members, and there were roughly 40,000 people that called into Washington, D.C. to call their member of Congress. And it was so much that I'll call my senators every now and then, or my Congress people, and usually you'll get someone to pick up the phone and they'll talk to you. It's not the representative in Congress, him or herself, but it's at least someone on their staff. There were so many people calling about these digital assets and how they needed to be regulated that it just went to an answering machine, a voicemail. It was that much demand. And so I think that, again, was a major wake-up call to the people in Congress here in the U.S. that if you do something that's going to be harmful to the digital industry, there are going to be a lot of loud voices that start coming after you. So at first you need to do no harm, and who's making policy on how to regulate these assets. So I saw that as a mega positive sign. And afterwards, I've heard many congressmen and senators talking about how they want to do this right. They don't want to see this as something that see as an innovation that gets stifled.
So is there any key regulations or key decisions that's coming up maybe in the next 3 months or next year? There's something that people have to notice of. If it really passes, it's going to be huge for industry. Is there something like that's happening?
I don't see anything in the next 3 months. I do think that we are continuing to see more development of these projects, as Alex was alluding to. The INX token was another major security token offering that got passed at a very prestigious team of Wall Street veterans that put together not only a cryptocurrency exchange, but also a security token exchange at the same time. And that was issued as a security token. So a regulated instrument that showed value and economic ownership in an exchange. And so I think that was a very groundbreaking kind of release, and it just sets a prototype, or it sets the stages for additional types of these security tokens to come out. I think the market needed to see these proof of concepts come out where you didn't see anyone getting in a major lawsuit, you didn't see anyone going to jail, you didn't see a ton of hang up in terms of dealing with regulators, and just having those kinds of successful cases to point to, I think creates a lot of confidence in the marketplace.
Okay, circling back to just now, Alex, you mentioned that because they brought over the community, and that's how they raised so much and so fast. What are some of the interesting ways that you guys have observed maybe in the past year of how people are using this technology to raise money and to impact more people? Is there some interesting stories that you guys have to share? Sorry, Alex, you're muted.
I think that there are a variety of stories. There is a site from a team in Miami that I think it's a really interesting site. I shot out to them a security token market, and they list like close to 500 different security tokens across the world. So I think that there's a lot of innovation there. I think that it's a matter of educating the community so that people bridge this idea of making multiple X's on a cryptocurrency to investing in some kind of alternative investment, either like a power plant or a crypto exchange. But obviously these are businesses, right? And they're bounded by the returns that these business models can generate. So I think that as we evolve and teams like your team from ADDX continue to make these educational sessions, we're going to see more appetite because interest rates are low. People are not looking to keep cash on hand, and alternative investments, in my opinion, is a good way to balance not only your general portfolio, but also your crypto portfolio.
So you mentioned
I
that.
would add to that with the.
Yep.
Oh, so I was going to say, I would add to
please
that.
Continue. Please continue.
Sorry, in terms of just the alternative assets, in terms of where rates are, I think cash assets going onto the blockchain make for a good sort of introductory type of play into this space, because there are still questions into how much will these security tokens trade in the secondary market. And investors are a heck of a lot more comfortable hearing, well, if you don't know if it's going to trade in the secondary markets as much as you want, at least if you're getting a monthly or quarterly or even yearly dividend or interest payment from a security token, that is a lot more settling with them, and helps, again, create the confidence that's needed to get over this chasm that we're facing right now of when do investors really start to embrace this technology. So we've seen a lot of high-end real estate projects getting tokenized, again, income producing types of properties. My firm is working heavily with some firms in the oil and gas space to tokenize royalty payments on in the oil and gas space, where maybe you have a landowner in Oklahoma, they've got tens of thousands of acres of land, they've leased that land to a big oil company like Exxon or Shell, and those companies are giving the landowner cash flow. If you could tokenize that cash flow and sell it on the blockchain, now that creates all kinds of interesting plays with lowering costs of capital for the owner of the property. It also creates a new way for investors to get higher returns than they would be able to achieve in the traditional bond markets or even in the alternative income producing space.
Yeah, you both mentioned that there are clear benefits to illiquid assets and also the private markets. But can security tokens benefit the public markets? Maybe, David, would you like to answer that?
Yeah, I think I want to go back a little bit about the advantage of security token. And I keep emphasizing blockchain is because in terms of digitizing security, we have done that long ago, whether it's a central depository and so on. Digitizing asset is not something new. It has happened for a long time. But tokenizing it is very different because you have interoperability You can do token swap. You can use all the smart contracts, and it then become very portable globally. And that is the key thing that we need to look into, because if you look at trading of securities, one of the major pain point of trading security, especially in Asia, is that whenever you trade, you need to have to take on the counterparty risk. But therefore, you need to have a liquidity pool, and that liquidity pool is cost to exchanges. And if you are able to tokenize the security token with combining with some form of stable coins, either in the form of a corporate stable coin or a central bank digital currency, then you are able to facilitate payments to payments, as well as payments to versus delivery. And because of that, there's no counterparty risk once you are on the blockchain. Is much better than automatic clearinghouse, right? So that solved the pain points of what digital security that we have been talking about, because security has been digitized anyway, right? But tokenization is totally different, because you can use smart contract, you can do payments versus delivery, you can even do a lot of settlement, which then you do not need a liquidity pool, as the counterparty risk is reduced to almost zero, because it's instant settlement and you don't need a settlement at different intervals. So that is the advantage, and based on that, you could see that it certainly will take off. Now, the key question then is that there are a lot of securities which are very good companies in Asia, right? In Asia, they're very good companies, but because the trading volume is very low, therefore they are very much undervalued. Now, if the liquidity increase for good companies and good projects and good security token, then it certainly will benefit both the exchanges as well as the so-called ultimate investors. I think that's key to it. However, if the underlying asset is a low quality asset, and the only reason why it is not liquid is because it's a low quality assets, and through tokenization, we make it a lot more liquid, that is a bad thing. So we have to differentiate on the quality of the assets in terms of why there's no liquidity. And if that is the case, that the good quality securities are being traded more often, and therefore the security can be fully valued, then certainly is a very good thing.
Yes, I mean, we all been saying about how good security tokens are, how it will change, revolutionize the capital markets. Perhaps we can take a step back and maybe have a critical look at this whole industry and maybe answer why would security tokens be bad, or what is the disadvantages of security tokens, so that the audiences tuning in can get sort of a holistic overview. What are some of the disadvantages you think security tokens have? Okay. Maybe Baxter or Alex, would you like to answer that?
To me, I mean, I think that one of the disadvantages that you have with security tokens is really unknown, and just the fact that a lot of the technology has not yet been implemented and or approved by a regulatory body to make it happen. Now, that could change in the near future, and I think will change in the near future, but it's really the old saying, we have nothing to fear but fear itself. People still just have to get over those ideas that we have not seen a lot of use cases around security tokens, and people are still very uncomfortable with ideas like digital wallets or custody, or what are the costs involved with some of these ideas. I mean, I say sometimes to people when I talk about security tokens that people are comfortable with the strategy, the whole idea around tokenization. What they're not comfortable with are the logistics. How much is it going to cost? How do I implement this? What are all the steps that I have to get my compliance department, my operations department, my clients up to speed with before we can actually implement these? So those are it's just really the development steps that have not been perfected or really just haven't been put into place yet that I think are keeping us back. But I see that changing with time.
Yeah, on our end, as a firm, we've been working very closely with our clients to solve two key aspects, and I think Baxter kind of touched on them, as well as Professor Lee. I think that there is lack of liquidity, right? And that's a service that we'd like to provide our clients. So if we're helping them issue a security token, we'll also provide that market making. Because the idea is, like, if someone wants to sell a security token and go to Bitcoin and gain or lose that that margin and then go back to their security token, you have to have a market maker functionality behind it. The other point that Baxter really eloquently touched upon is, like, what is underneath the hood, right? So we see all these security tokens that are out there, but what is the actual asset that's being digitized, right? And one of the things we're looking to do is to register all the transactions that created that asset on the blockchain, so that as someone who wants to invest, you can also do due diligence on the asset, which I think it's kind of like one of the biggest challenges today. You see a lot of like these promising projects raising money via security tokens, but is the asset really there, right? Can you really do due diligence and check if that oil field that's going to be leased to Shell already has all the documentation in place?
Right.
Maybe
So,
I just add on. Maybe I
yes.
just add on that there are two major risks to security tokens, right? First is the underlying blockchain or distributed technology that you're using. Then it certainly has to ensure that whatever that you have over there, to ensure that you have safety of the underlying data, as well as certain liveness, such that you don't get a situation where there is a hiccup, because it's a lot more complicated than a centralized ledger. No doubt there's a single point of failure for centralized ledger, but in terms of distributed ledger, you have to ensure that your algorithm, is consensus algorithm, has to work well. That's the first technology risk that you face. And the other risk is, of course, once you talk about token security, you involve smart contracts, right? You will be doing token swap, you'll be doing payment versus delivery. Everything is automated and probably autonomous. And the code itself have to be audited. And we have to be very clear that these codes do not contain any bugs or any possibility that will damage the reputation of the institutions who are involved in this token security, and therefore code edits become important. So, of course, it's quite easy to mitigate that. You can set out a technology risk management committee to ensure that that committee is responsible for some of these possible bugs and design fault of the distributed ledger. So it is not something that cannot be addressed, but certainly is a risk.
Yes. So,
And Alexander,
Baxter
I'd like to
and
just
Alex,
share.
sorry. Yeah, sure.
Sorry, go ahead.
Yes, Baxter.
I was going to say,
No, go ahead.
if I could, I'd just like to share just one or two other points that just kind of where the public markets are, that here in the United States, that could highlight that just again the potential of the security and add on to some of the things that Professor Lee was saying earlier about adding this liquidity and how some of these smaller projects have not gone into the public markets when they would likely have maybe 10, 20 years ago. I'm going to just share my screen real quick and see if I can show you the some slides here. So in a second when you can see.
Are these the slides?
Can you see my slides here?
Do you see the slides on the screen? Are these the slides?
I see the
Can
slides.
you see my slide?
Yep.
You can see them. Okay, great. Let me just show you two slides that illustrate what's been going on in the United States over the last roughly 20 years. So at my former job, I was with a group in Dallas called NFJ Investment Group. We ran the largest small cap equity mutual fund in the United States. It had roughly 10 billion in assets under management. And I would have conversations with one of my colleagues. His name was Paul Magnuson. He was the lead portfolio manager for that massive small cap fund. And he used to complain all the time that the size of his universe of publicly listed companies was shrinking over time, thereby decreasing his opportunity set, where as an active manager, he could create value for our end clients. And I think that this chart really shows that. This is a study that Morgan Stanley did a few years ago, and it looks at how, with this black line, that the number of US listed companies has decreased from the year 2000 until today by about, not quite 50%, but it's a massive drawdown. At the same time, if you look at the number of private equity companies in the United States from 2000 until today, you've got more than, let's call it almost a factor of 5 increase in the number of those companies. Over that span of time from 2000 until today, the market or the economy as a whole, GDP is up at least 2 times, maybe even more. So why are these companies not listing anymore? And I think it goes back to what Professor Lee was saying earlier. Maybe you get too much pricing of some of these assets that are not quite as liquid. Maybe you have issues in the public markets where these companies don't want to deal with the regulators. Maybe there are issues around stock options. I think that security tokens really have the potential for, again, these private markets to gain the optionality for liquidity by utilizing a lot of the advantages that we've talked about earlier in this call. We should be able to see public companies gravitate towards security tokens to, at a minimum, get that optionality for liquidity, and then also cut down costs by utilizing the efficiencies that the blockchain provides. And what I think that essence will do is what is illustrated here on this next slide, where we're looking at different kinds of global asset classes, whether it's global bonds, high yield bonds, equity, hedge funds, timber, etc. And what you see in the marketplace is that there is this continuum of liquidity where some assets are more liquid than others. And we know, from a finance 101 standpoint, the less liquid an asset is, the higher the cost of capital has to be required to make that asset priced properly in markets. And what security tokens will do is add liquidity to these traditionally illiquid markets and thereby lower those costs of capital. And therefore, that's good for the promoters of these projects. It's also great for the investors of these projects. And that's where I think people are really starting to grasp the potential of taking these projects on chain and by turning them into security tokens. It's just now people are saying, hey, how do I actually make that happen? What steps to implement it? They get the strategy. It's just the logistics part now that we have to solve. So I think that's again where the real potential lies.
So Baxter, I think we have a couple of people who are looking to tokenize their fund, whether through digital securities. As with your experience, helping so many other companies, so many other issuers do this and come into the scene, what are some of the concerns that they have that they usually ask you, and how do you solve those concerns?
It's usually over legal and regulatory. That is the first step in all of these types of discussions that we're having. So what we have recommended are the types of projects that we're targeting. We truly believe that less is more right now. Simplify, simplify, simplify in terms of the projects and in terms of the technology stack that we can put together. So as I mentioned with the oil and gas space, let's not worry about tokenizing an E&P company, an exploration and production company, where you have to deal with, are the hydrocarbons going to come out of the ground? Are they going to get to market? What's the price of oil going to be? It's just too many unknowns when you then tack on you're going to deal with a new technology, a new distribution channel, new issues with the regulator. So what we're saying in the oil and gas space is let's go with just a royalty type of platform where you don't have to worry about being an operator or getting the oil out of the ground. You're just getting literally a set of cash flows from a company that you know of. Again, Exxon, Shell, Chevron, someone like that. Take those cash flows, put them on chain, and have a very simple token that can trade or can be issued, can trade, and can pay a dividend. If it can do that, that creates a really strong proof of concept that this stuff is actually up and working. Then I think people will start to say, okay, if you can do it with something simple, let's build on top of that and take something more complicated. But it goes back to the old saying, you've got to walk before you can run. I think that's where we are right now.
So it's just to create something that is simple without the bells and whistles. It's like getting you from point A to point B, and that's it, without any of the fancy stuff. So that's easy to understand and people to accept it as the first step to much bigger tokenization or bigger projects.
I think so. It's a little bit like a student who comes out of a university. Say, Professor Lee, one of your students, what's one of the problems that they have when they come out of school? You go, he or she goes to a job interview, and almost everybody's come across this situation where the person who's on the other table looking to hire, they say, you've got a really good resume. You've done some good things with your life, but I can't hire you because you don't have any experience. And then the student sits back and thinks, well, how am I going to get experience if I don't get a job? But eventually that gets worked out with everybody over time, and people go on to do big and great things with their lives. That's literally the point where security tokens are right now in the marketplace, in my view.
Allow me to follow up from what Baxter is saying, is that I can immediately see that there could be a play of regulatory and investment policy arbitrage, because a lot of investment are governed by regulation and investment policy, and they just simply cannot buy if it's not listed. They simply cannot buy if it doesn't have a certain volume of trading. They simply cannot buy because it doesn't have a certain market cap. So security token, if they can tokenize good digital assets to release the value, then I suppose there is a huge play for fund managers in terms of regulatory arbitrage as well as investment policy arbitrage. Don't know whether Baxter agreed, but immediately I could see the opportunity there.
How about Alex? Is this something similar that you are seeing with your clients? Basically, their main concern is legal and also to simplify the whole technology process.
Yeah, I think that the technology process, I think we're kind of over it already, right? Obviously, you're seeing what FTX is doing and tokenizing shares as depository receipts. And the volume that they're getting daily, it's kind of like through the roof, right? You can get like all the different stocks that you could never get access to unless you're an American investor or an institutional investor with access to the American stock exchanges. And that's changing through what FTX is doing, which is fabulous. So I think that we're very close to solving the tech part. Professor Lee mentioned that we've been digitizing securities for a long time. Great example is NASDAQ. So the other piece of the puzzle remains like regulatory. What can you do and where can you do it is really where like the challenge here lies, right? I think that in the US, which is the hometown I can speak more about, although people think that there's convolution and confusion on what can be done, the Jobs Act is very clear on what you can do, right? And it's actually interesting enough. It's, you can raise up to $75 million every year. You guys have done a great amount of content creation on educating people on how to do that. I think that if you extrapolate that and take it a step further, then you're going to have like jurisdictional arbitrage, because it first starts with what can you do in that jurisdiction, and then the second step is like, which investors can you onboard, and what is the legal implication of that foreign investor trading on your platform, on your jurisdiction for their hometown. I don't know how many people on this call are Americans aside from me and Baxter, right? But like you have to pay, if you're American, you have to pay taxes no matter where you make your money. So it's something that it's not trivial, and you have to report to the IRS. So there is also a tax implication that needs to be solved. But I think that I agree with Professor Lee. We'll see that arbitrage for the next 5 years, potentially more.
What about we covered maybe the issuer's point of view, but what about from an investor point of view? Do you think investors are concerned about the underlying technology, or they're just like, oh, I have assets now, and then they don't really bother about the technology behind it? Are there any other concerns that maybe you have faced or people have asked you about?
I think that the technology, people are comfortable, right? I have a friend who runs Coin Metro in Estonia, and he says something that's very funny. People spend 2 hours online to save $50 on an airplane ticket, but they are ready to move 1,000, 2,000 into a smart contract without even questioning. So I think that people are over that hurdle of the technology. I think that people, like, if they are comfortable trading on FTX, they will trade it day in, day out. If they're comfortable trading on Binance, ADDX, T0, once they're in, I think they conceptually overcame the technology aspect.
So it's once they go over the initial. Yes, Baxter.
Yeah, I think that's right. I think once you get over the initial hump, you're sold on the technology. I think where getting other investors, more institutional investors, has been a problem in some cases is you maybe have a portfolio manager or an analyst at one of these firms that really understands that they've done the homework. He or she is totally ready to go about this. But then there are these internal conflicts within the firm where they say, now I got to go talk to my operations department. Now I got to go explain this to my compliance team. And that creates friction within the entity to be able to move, because just the way these big institutions tend to operate is you got to have all the departments on board before the portfolio manager, he or she, can sort of pull and make that investment. And so it just takes, again, time is really the essential ingredient here to get more and more people involved, because once you get the compliance department, the operations department over the hump, they'll be sold and you'll never have to have that conversation again. But it's just sort of this thing that this can often stop you. If you can't get those people to yes quickly, it can delay investment. So there is that internal piece that's being sorted out that we're seeing.
It seems like what I'm hearing is that people are very comfortable with the technology behind security tokens. They're comfortable, trading, comfortable buying. So what is the hurdle that's stopping more investors from coming in? And perhaps what is the catalyst that will really ignite this industry, that the mainstream people start to stream in?
So I think, Alex, there are two types of investors. One type, they're on their own. This is a small percentage. They figure out how to buy their crypto long ago. They are willing to take the risk. They learn what is hard wallet, what is hot wallet. They themselves expose the kind of risk, and they can take the kind of risk. That's a small percentage. Majority of people will rely on a licensed institution like ADDX in a reputable financial center where the regulators are friendly to security tokens. I think that is the key. The regulators has to give the comfort such that what you are providing is a third-party trust services. And a third-party trust services in a regulated jurisdiction of good reputation is the key. Is the key to mass adoption. I think that is very important to realize that you need a lot of investment mandate, investment policy simply cannot invest in any securities if it is not a licensed entity. They have to go to somewhere in Europe, some fund jurisdiction to list their fund, and hopefully the people will buy from there because they're listed. But if you're in a financial center and you continue to promote as a trusted third party, with a license and with a certain consumer protection, I think it's just a matter of time that you will take off. That is how I view it. So there is a lot of first mover advantage in getting a lot more people licensed, such that institutional investor can invest in them. And once they invest in them, they learn about it, then they will be comfortable, and most importantly, they need to be accountable to their board of directors when it comes to investment risk, right? If they cannot explain the technology risk, then they can just say that it's a licensed entity in a well-reputed financial center. That will resolve the problem.
So instead of like doing their own homework, they just rely that it's regulated, it's audited by a third party, and that brings the trust, and that will bring more investors into this scene.
So
is that what you're trying to say?
Yeah, you are a new form of trusted third party. There's a traditional form of trusted third party, which is the old exchanges that we are used to, right? But the new form of exchanges are like you. You are different. You are a trusted third party. Then you have to find all sort of ways to reduce your settlement risks, to lower the costs. And once you have successfully done that, you pass on the cost to the investors and give them the comfort that you're a new form of trusted third party. Then the adoption will just continue to increase. I think that you just have to earn the trust from that way. But regulation play a major part for other licensed institution in this space.
Is this something, Baxter and Alex, do you guys agree that also regulation is one of the big catalysts that will propel this industry?
For sure. Yeah, for sure.
Absolutely. You've got to have that regulatory element so that, again, legal compliance operations will know the ground rules by which these new operate under. You can explain things to your clients a lot easier when you say, hey, this jurisdiction is given the green light, and there's strength in numbers. You say another firm has done this, or another investor that you've heard of has gotten involved, or look at the returns we've been able to generate and not have any problems. You're selling confidence as well as the investment product. It's just the way it works in the investment management space.
So how do you guys think, looking into the future, we just got a couple of minutes left. I just want to look into the future and say, in 2022, what are some of the trends that will happen? What are some of the big things that you guys think will happen in this security token industry? Perhaps we can go one round. Maybe Baxter, you can start.
Sure. I think you're going to start seeing more of these projects going online. I think we're going to start seeing, and I think this is a critical piece, more regulation around the stable coins and around more of these central bank digital currencies, because to really get the potential of blockchain to its fullest, you have to have that payment rail so that you can actually do a swap on. And we're going to have to be able to, in one way or another, be able to best have rails into the fiat system. So I think that's going to help out and be a major thing that sort of breaks the ice. And I think you're going to see more and more exchanges around the world, more regulatory, more projects, and it's just going to start to snowball from there.
Great. Alex, what are your thoughts?
I think that you're definitely going to see a proliferation of different exchanges and this merger of traditional crypto exchanges bringing on security tokens to their platform. right? And I think that that's where really you're going to see like a massive adoption. FTX is doing that. Binance did that. And I think it's just going to continue going in that direction.
David?
I think if we can identify a lot more undiscovered securities, I think that is one area which is very important, and make it a security token and available and democratize some of this good investment to the public. It will be welcomed by both the regulators and the investment community, and there will be mass adoption. That's one. And I can see also that there are a few years of regulatory arbitrage, while the rest of the regulators are still struggling. Those regulated exchange, whether they are crypto or whether they are pure digital asset exchange, will have a lot of advantage over the traditional exchanges where they're dealing with the old-fashioned way. So I cannot see the trend going backwards, but going forwards. But there will be other areas as well that once the regulation become more lax and we have token security, in other words, you tokenize things which are not, the underlying asset are not legally defined as securities, but you tokenize commodities, tokenize objects, and eventually they become security. So you will see even a more exponential growth in the exchanges, because when your security token plus a token that eventually become a security, then people will start to see that the investment horizon has increased and a lot of assets are under-owned. And investment is all about under-owned, good quality investment with negative correlation with their portfolio. If you can go towards that direction of negatively correlated returns with quality assets or quality tokens and very much under-owned, then there's no other way except that a mass adoption eventually will come.
Great. Okay, on that note, just one last circle. Let's say you met somebody who is skeptical about security tokens. How would you convince them? Let's go one last round. Baxter?
I think, again, you talk to them, first of all, historically. You say, look, there was a day when the internet was coming around and people didn't understand how it worked. They understood there were these computers kind of talking to one another. And I remember in the late 90s hearing about these crazy people who were putting their credit cards online to buy a pair of jeans or shoes or whatever it was. And they were risking it all by putting their credit card number online. Now we do that every day. We're seeing a very similar set of trends and parallel experiences to what happened with the dawn of the internet. And I think when people start to put chain and security tokens into a context that they can understand, that they can conceptually relate to, they start to understand it a whole lot better. I usually talk in those kinds of stories to investors, and that really helps them to get it. And then I think, again, you find some simple, easy projects that are not that complicated, that are going to be able to have simple but steady returns. And I think that's easy to achieve in this type of a market where interest rates are low. I think that's the formula for getting things off the ground.
How about you, Alex?
I think that what we'll see is a chase of yield, right? That it's going to be an economic result post-pandemic where we're going to have so much free cash on the market, things that we have historically never seen before, which will result in a natural inflation on a global scale. And then the evolution of that is people chasing alternative investments, right? Because you need to put your money to work. I think that if you fast forward 5 years from now, everybody is going to be quasi a venture capitalist. trying to understand how do they make investments, or else you're just going to lose to inflation. So I think that in that trajectory, which is going to be a major paradigm shift for the global economy, we're going to see a massive growth of security tokens as they are an easier way for you to distribute and fundraise for alternative investment products. And it's, it's like Baxter said, it's an evolution. You get people to get educated, you get people to have demand for these products, and it takes a while, and people get accustomed to, and you will see security tokens being listed on some of the exchanges that they are already familiar. And next thing you know, you're going to have a new asset class.
Awesome, great thoughts. David, why don't you finish it off? What are your thoughts?
I have 2 points. One is that not only for security token, but for any nascent or new financial products, you need to look at where the talents are flowing. Look at talk to your headhunters, talk to your human resource. Where are all these people going? Where are they going? Observe where people who are highly paid in stable jobs, where are they moving? That's always the first sign where investment should go. Secondly, you got to ask yourself whether you are putting aside money to continue to educate yourself. So you may want to put aside a small amount of money, I call it tuition fees, and buying into some of these new products and willing to lose it all. It could be $5, $10, $100, $1,000. You just go in, and because if you don't try, you will never learn anything at all. And if so many people are going into there and telling you that it's something that you should go into, even though you're very skeptical, I would say that put aside money to enrich your own knowledge by losing it all.
Oh, great. There's some great sharing, meaningful sharing. I mean, yes, I totally agree with you, Professor David, that instead of just looking at it, reading about it, I think the main experience comes when you really dip your toes inside it and you're inside the ecosystem, and there's some kind of risk involved in terms of how much capital that you put into just try it around. Well, on that note, thank you very much, Baxter, Alex, and David, for another year at this Global Security Token Offering Panel. I hope to see you guys next year to hear your insights again and hear your predictions once again for 2023. I think as the years goes by, I think this panel, this whole conference will start to get bigger and bigger. Maybe, never know, you guys will be in person a couple of years down the road doing this on stage instead of over a webcam. Thank you so much
Thank you
for
so
coming.
much. Bye-bye.
Thank you. See you. Bye-bye.
Enjoyed it,
And
as always.
for
Thank
all
you
the
so
audience
much.
still tuning in, thank you very much for joining us for over these 3 hours. I hope you guys have learned a lot from insight from these speakers that we have invited from across the world to share the insights. If there's any pending questions or you want to contact or reach out to us, please just email us at team@edx.co, and we're happy to make a connection or answer some of your questions. And that's it. Thank you so much. See you guys next year, and take care, and good night from Singapore. Bye.
You too. Thanks so much.